about how they're all going to bid separately, this point about how it's going to be priced. And yes, this is just a way to diversify and make it better for the consumer, but we're not trying to blow anyone out of the business or lower prices. But it raises a lot of questions going forward of exactly how this will pan out.
Well, here's the question for regulators. Are regulators going to be unhappy, Anne-Marie, with the prospect of a joint venture between the likes of the Walt Disney Company, Warner Brothers Discovery and Fox as well?
That's one question. The second question is, will it matter depending on who wins November's election? But if you look at the mood music coming out of the DOJ and the FTC, Lena Khan in Washington, D.C., I mean, where's JetBlue and Spirit right now? That has serious hurdles. Are they going to like this kind of consolidation? I'm not sure.
Got to work out how this is even going to work. So, Lisa, it's early days, and it feels like really early days. Haven't spoken to the leagues. They were very clear about why. Wanted to keep this confidential, understand all of that. Still need to work out a price. Still not been told a name. Just know that it launches in fall. And still don't really know how any of it's going to work from there on. Which
is curious, because it's going to launch pretty soon. So it raises a whole host of questions, none of which were particularly answered, but we do have a sense that the mood music hasn't really angered too many people, at least according to Disney, which is, you know,
sure.
You're hearing maybe from some certain sports leagues a little bit of concern.
There's one really impressive element, though, of the Walt Disney numbers, just international theme parks.
Yeah.
We've been worried about consumer confidence in China. Don't hear that about the theme park in Shanghai. We've been worried about the backlash against America Inc. What you're seeing happen to Starbucks, what's happened to McDonald's. Don't see that when it comes to the Walt Disney Company either. And
he basically is saying ongoing strength there. Putting all of that aside, and we did hear from Hugh Johnston, you know, the sort of dream and the sort of brand of Disney and the magic of that, the magic of buybacks and share repurchases and a dividend. Really, to me, this is a notable element of this, considering that this is a feature of a number of the outperformers. They give the cash back. And this, I wonder how much this is going to be a theme as equity, cash, and interest starts to become more dominant.
If I could bottle Bramo, that segment would be it right there. Forget Mickey Mouse. It's about the magic of buybacks and cost cuts. And let's face it, Lisa, isn't this what the likes of Tryon, Nelson Peltz want to see?
I mean, yes, exactly. So how much is this a direct response to Nelson Peltz? Take this for magic. On the other hand, you know, this is really what a lot of investors are looking for ultimately, and that's what they've been rewarding. I mean, we think about Meta. Yeah, they did a blowout quarter, but also they instated bigger buybacks and dividends. So this, to me, is really going to be something I'm looking for.
They don't want to talk about him, but they're talking directly to him. Their stock is up by something like 8% in the pre-market. The broader price action on the S&P 500 looks like this. We're negative by 0.14%. Yields are higher by a single basis point. The 10-year 4.1366. Coming up this hour, here's the lineup. Crossmark's Bob Dole urging caution as the S&P flirts with 5K. Lee Klaskow of Bloomberg Intelligence on Maersk's warning for the shipping industry. And Richmond Fed President Tom Barkin calling for patience when it comes to rate cuts. We begin with our top story. 90 minutes out from the opening bell and the S&P 500 within striking distance of 5,000. Bob Dole, CIO at Crossmark Global Investments, out with a warning saying, quote, credit spreads are probably too tight relative to the risk of some economic weakness or slowdown. Fourth quarter earnings reports have exhibited modest margin pressure. Bob, I'm pleased to say, joins us now for more. Bob, great to catch up, mate, as always. Start of the year, we talked about this in the last hour. Price for perfection. Then we keep on rallying. Bob, what's going to hold us back?
Hard to say. I'm one of those fully invested but biting my fingernails. Look, I don't know where the market's going near term, but I can make a few observations. Number one, every week that passes, the expectation about how much the Fed's going to cut rates gets less. Two, every week that passes, earnings estimates for the full year come down a little bit. Three, the stock market is selling at over 20 times earnings. I put those three things together and I don't know. I can't make the case for a whole lot of upside other than momentum, which is very powerful.
Bob, you've given me an easy four, haven't you? And you said it. Four, the stock market keeps rallying. Bob, let's talk about what we're standing on. Are we standing on the shoulders of fewer and fewer names in this stock market? And is that necessarily a problem?
Well, we saw that for most of last year. It broadened November, December. We came into the new year, and you know the story. The S&P 500 is lagging the Magnificent Seven, although there's been some fraying there. But these mega cap stocks are still working. History would tell us that as markets get narrower, the risk goes up. But it lasted for a long time last year. I think the only way we get a significant broadening is more confidence about breadth in the economy and breadth in earnings, and that doesn't seem to be the case today.
Bob, I love your description of sitting there fully invested, biting your fingernails, saying, I don't like anything about this, but momentum is a powerful freight train and I can't get against it. What would make you change your tune?
if you could convince me that earnings estimates are going to go up, that the Fed's going to cut rates as much as, look, you can't have it both ways, in my view. You can't have double-digit earnings growth, Lisa, which is what the consensus has, and have enough room for the Fed to cut rates 5 or 6 times. One of those is going to get disappointed, maybe both. So if you can tell me I'm wrong, and we are going to get multiple cuts, inflation is heading to 2%, and we're going to get double-digit earnings gains, I have no choice but to buy more stocks.
In the meantime, what's your defense? How do you play defense at a time where a lot of people say that there's an equal upside to inflation and growth as a risk as there is to the downside?
So the defense or portfolio positioning, I want quality. I want earnings predictability, earnings persistence, good cash flow multiples. What I don't want is companies where the only way I win is if the PE ratio goes up. I'm not betting on that. So I want to have that ballast in terms of earnings and cash flow.
Which brings us to Disney and the hopes and dreams of share buybacks and dividends. How important is it for you to see some dividend increase, some sort of share buyback that is announced at some of these earnings? Is that sort of a defining feature of a winning stock of quality?
Well, it is a possible feature there. I'm more interested more broadly, cash flow. Is it increasing? And yes, what are they doing with it? If they can get a higher return by reinvesting in their business rather than giving it back to me, I'd prefer them to do that. But where cash flow, increasing cash flow, reasonable multiple on cash flow, secondarily, what are they doing with it?
Cost cuts. That's what I want to talk about. PayPal. PayPal in the pre-market is down about 9%, struggling for profit growth, forecasting little of that for 2024. And as we've heard in the last month or so, cutting about 9% of the workforce. Bob, you've talked about margins and some of the pressure coming through. Are we at that phase of the cycle now where we start to see defense of that, where we start to see more layoffs coming from corporate America?
I think so. We've already seen it to some degree in technology. Financials are picking up in terms of the number of layoffs. And a lot of that, as you point out, is a reaction to, I got to support my profit margins. Maybe I can't raise my prices like I was before, which is typical of this phase and typical more normally. Big price increases are not normal. We've had some of that because of the demand for so many things, and that's just backing off some, which is another risk to the earnings picture.
Are you more constructive on some sectors over the others and their ability to handle some of those issues?
Yeah, I think, and part of it is based on valuations, and I come back to one more time, the cash flow. I think if we get into some sloppiness, if the market fades a little bit, the financial and energy sectors, because of their cheapness, because of their multiple on cash flow, may offer some defensive characteristics. And then you got the staples, and the price increases there continue to be pretty good.
Hey, Bob, good to hear from you. Bob Dole there of Crossmark Global Investments. Good to catch up, as always. To kick off things this morning, Citi, right on cue. Bramo, Wang cutting 10% of the wealth employees over in London. So a bit of reporting from the team here at Bloomberg. Citi, Wenger moved to cut 51 roles across its wealth business in London as the division's new chief looks for ways to boost the returns generated by the unit. Seeing more of this, and you can say, Lisa, that it's idiosyncratic, Jane Fraser's big turnaround story over at Citi, but these stories are piling up.
And it's piling up at a time where maybe it's returned to the past, it's a normalization, or maybe this is the start of a new cycle of cost cutting. I will just say it's about 50 staffers there and about that this would affect in London. Real question, though, to me, and that's actually what I was thinking about this morning. Is this just normalization? I was looking at McKinsey, for example, and putting people on notice. Is this going back to the way it used to be before the pandemic and labor hoarding? Or is this something else? I just don't think we know yet. The
stock is down by, let's call it 0.4%. Very marginal move there in the pre-market for Citi. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Consulting firm McKinsey is putting 3,000 staffers on review as the economy slows. Employees will have about 3 months to show better performance or be asked to leave the company. More workers are facing the notice this year after McKinsey grew headcount by 60% since 2018. Similar firms announced job cuts at the end of last year, while consulting pulls back from a pandemic boom. Apple's limited release of its Vision Pro headset is prompting a hefty resale market overseas. The $3,500 device is only available in certain U.S. stores, and overseas resellers are charging a chunky premium. Some are going for more than $5,000. Apple has limited the rollout of the new headset in order to accommodate the elaborate setup and customization process for each buyer. Demand for rental properties in Manhattan has surged by 14% in January, keeping rents higher during the traditionally quieter winter period. The median price for new leases was up to 1.3% from January 2023 at $4,150. That's still lower than July's record-setting median price of $4,440 a month. New Yorkers have been seizing on the slight decline in costs from the summer peak. And that's your Bloomberg Brief. John.
Danny, thank you. Just want to go over that again, not for personal reasons, not because my lease is up at the end of this month, but rent was only up 1.3%. Just 1.3%.
Yeah.
You know, just as that negotiation begins. Just want to repeat that. Rents were only up.
Hold up. No. You're going to go here. Have you fully reset from the pandemic levels?
Still working that out, yeah.
Okay, all right.
Rents have been climbing. Yeah, they've been going up loads.
Yeah.
They've been going up lots.
You're locked in. You're locked in on a COVID
Hold on a
era.
minute. Rents are up 1.3% from January 23. That's really important to know. Up next on this programme, Mask is out with a warning.
Yes.
What is really unclear today is the situation is unfolding. It's still actually in an escalation phase. So we have rejigged our network completely, sailing everything south of the Cape of Good Hope.
That's coming up next, live from New York. This is Bloomberg.
If you're thinking about getting great internet at a great price, good thinking. There's never been a better time to get reliable 100% fiber internet. Switch now for $44.99 a month and save up to $600 on your first year versus cable. All with free premium Wi-Fi and free expert installation. Fast, easy, reliable. Frontier.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
We are 1 hour and about 15 minutes away from the cash open, the open and bow just around the corner this morning. Good morning to you all. Equities on the S&P 500 negative by 0.16%. We are up by a basis point on a 10-year, 413.27, and crude is positive by about 1.4%, $74 and let's call it 90 cents. Under surveillance this morning, Maersk out with a warning.
What is really unclear today is the situation is unfolding. It's still actually in an escalation phase. So we have rejigged our network completely, sailing everything south of the Cape of Good Hope. and expect to do that for a while until we have really safe passage reopened in the Red Sea. So this could be with us for a while.
Here's the latest. Maersk stock down hard by almost 17% in Europe. The shipping giant reporting fourth quarter earnings and guidance that fell short of expectations. Maersk is warning of a glut in the industry when the conflict in the Red Sea normalizes and inflated freight rates return to normal. Lee Klasko, senior logistics analyst at Bloomberg Intelligence, joins us now for more. Lee, let's talk about that. The inflated freight rates. Lee, you've been on top of this. You've talked about this for a while, that this just won't last. And ultimately, these freight rates are going to come back down again. Lee, what's the outlook now?
Yeah, I mean, the comments from Maersk really wasn't surprising to us. I mean, rates are up between 200 and 300% since the October lows when you're looking at, going between Asia and Europe. And the reality is the conflict in the Red Sea has been a short-term, unsustainable kind of push on rates, and when things normalize, and they will. I mean, our view is that it's going to be, we're not going to be talking years, we're going to be talking months when this gets resolved. And once it gets resolved, not only are ships going to continue, stop going around the Cape of Good Hope, they're going to start going to the Suez Canal, and that's going to actually create a lot of capacity on the market. And what the shipping industry is facing is at least 2 years of supply outpacing demand, assuming normal growth trends in demand. And that's, well telegraphed. We kind of have a pretty good view of sight of where supply is going, because it takes a long time to order and then build a ship. And so we have that data available to us. So, when you're looking at that, plus call it low single-digit demand growth, supply is going to be outgrowing demand by 200 to 600 basis points over the next 2 years. And that's going to keep rates, back to maybe not the October lows, but, to lows well below where we are today.
Lee, I want to get into supply for a moment. This didn't surprise you, it surprised someone. The stock is down by 17%. Lee, I know you don't do price targets, but can you explain that move?
Well, the reality is, since December, the stock's up 22% before today's move. So, I think the move in the stock near term was a knee-jerk reaction from these, creamy high rates. There's no doubt that these rates are fantastic, and expectations for Maersk and most liners were that they were going to lose money, and so most people were expecting, well, maybe they're not going to lose as much money, or maybe they'll even make money this year. But the reality is that's still probably going to be hard to do. Again, assuming that our thesis is right, is that this doesn't follow us through the whole year. The crisis in the Red Sea. So, probably it's going to be pretty hard to make money in this market when rates, quote unquote, normalize.
I'm really struck by the fact that what's bearish for Maersk is actually really bullish for humanity. If the idea is that we're not going to necessarily get some sort of prolonged fighting or conflicts. Do we have a sense of Maersk having any kind of inside view of this, or just, how unexpected the idea of some sort of resolution is?
Right. So obviously, peace in the Middle East is pretty difficult to get. But assuming that Israel and Hamas kind of end their hostilities, you would think that the Houthis would stop the attacks. The Houthis, the longer they do this, they're going to make more enemies around the globe. And some of their neighbors, like Egypt's suffering a lot because of the Suez Canal not being open. They're losing a lot of revenue that they rely on. And, it's impacting global trade. It's impacting China. While a lot of other countries are sitting at the sideline right now, and a lot of the interaction has been between the U.S., U.K., and the Houthis, that coalition could grow the longer this goes on. So, but what I also would say is that I am an analyst, and I'm usually like a half glass full kind of guy. The good news is that, Maersk was predicting low single-digit volume growth. So that's a good news for the global economy.
Lee, the CEO said we have not seen the level of threat peak, which makes me think, are they going to start pulling back even more ships from going through the Red Sea?
Well, the liner industry has really no more ships to pull back. The only ships that are going through the Suez Canal really are tankers and dry bulk ships. A lot of the tanker ships are carrying Russian oil or Iranian oil, so I think they might get a free pass. But other ships that might be carrying goods that are heading to Israel or maybe U.S. or U.K. goods, you'll see those ships probably divert around the Suez Canal because it's not only it's becoming dangerous, but it's becoming more expensive for shippers. Insurance rates have gone up considerably, since the activity that's been going on in the Red Sea. So it's becoming, not only you're putting your ship and your crew at risk, you're also going to have to spend a lot more money to go through the Suez. So if the conflict does accelerate and the Houthis kind of expands who they're targeting or what kind of ships they're targeting, that would have a ripple effect on the dry bulk and tanker markets, which have benefited from a rate perspective from the dislocation created by the issues in the Red Sea.
Stepping back from the issues in the Red Sea, what did we learn from Maersk in terms of shipping with China?
The reality is that China has not, kind of come out of or has recovered as quickly as a lot of folks have thought. Coming out of the pandemic, we're heading into the Lunar New Year, so there should be a seasonal slowdown. We're just still waiting for China to rev up their engines to drive that not only the export demand but the import demand of goods like iron ore and crude oil. So, China is the engine really for global shipping. As China goes, so does demand for, whether it's the container liner industry, the tanker industry, or the dry bulk industry. So we're still waiting for them to kind of emerge from their slumber, if you will.
Lee, let's talk about where we started this conversation, which was excess capacity, too much supply. Lee, you cover an amazing industry, and I think we all remember coming out of the financial crisis, 08, 09. This was a business and industry plagued by excess capacity, ships that had been given the green light to build all hit at exactly the wrong time. Lee, why is it so difficult in this industry to manage capacity? Why are we repeating that again?
Well, there's a few reasons. One, by the time you order a ship and get it delivered, it can be well over a year. So, when things are really good, they can turn pretty quickly depending on the global economy. When the financial crisis happens, it's a snap in terms of, a decline in demand. But then you also have, not a lot of rational players. You have players that are just looking to be the biggest, or players that might be somewhat subsidized by their the governments where they reside to kind of ensure free trade. So they want to make sure that their shipping industry is robust because either they need to import a lot of stuff or export a lot of stuff. So you have a lot of players that might not be in it for a profit. They just might be in it for other reasons, and they're willing to subsidize those markets. So there's a lot of reasons, and it's gotten a little more consolidated over the years, but it's still, we would view as a pretty fragmented market because there's a lot of small players out there.
Amazing. Lee, good to hear from you. Let's catch up soon. Lee Klasko there of Bloomberg Intelligence, one of the big movers over in Europe today. That stock down by something like 16 or 17%. Bramo, not a surprise to him, but a surprise to many, clearly, given the stock move this morning.
What I think is fascinating is so many of the headlines are saying that shipping bosses are coming out and they're warning about a prolonged conflict in the Red Sea. And you dig under the hood, and the problem with the share price is that it's not going to go on for that much longer, and they're not going to have the elevated pricing that they had previously.
Freight rates won't last because capacity's going to kick in and demand's not great. That's ultimately the story here, isn't it?
Again, what's bearish for their stock is kind of bullish for humanity. So let's hope that that's, No, I mean, seriously, you just have to wonder.
It's a point well made. I'm with you.
I just, it's hard to be like, oh, it's terrible that we're going to have a resolution to a conflict that's, been an issue. I'm just saying, I think it's interesting to see whether that is really going to be the case, especially given the potential, increase in demand.
I was taken back by the line the CEO said, saying there's no clear line of sight on when and how the international community will be able to mobilize itself and guarantee safe passage for us. Is he putting out this flag to Washington, to London, to say, you're not doing enough when it comes to these Houthi militants that have directly attacked us?
They haven't been able to restore order as much as they've tried, and the president himself has talked about it. It hasn't worked, but we'll keep on doing the same thing to try and make sure that it will work. Coming up in just a moment, jobless claims just around the corner. We'll get to that data in just a moment, and reaction from a Fed official. Richmond Fed President
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Live from New York City, waiting for jobless claims data. Going into it, here are the scores on the S&P 500, down by 0.2% on the S&P. On the Nasdaq, also lower, negative by 0.2% as well. Going into that data, the bond market set up as follows: 2-year, 10-year, 30-year. Here are the scores for you. Yields a little bit higher on a 10-year by a single basis point. On a 30-year, up by 2 basis points. The yield on a 10-year, 4.13. On a 30-year, 4.34.52. With your jobless claims data, let's bring in Mike McKee. Hey, Mike.
Hey, John. Well, it is another good day in the jobless world. 218,000 jobless claims reported last month. Remember, we had the big last week. We had the big jump the week before, up to 224, and now we've gone backwards a little bit on that. I'm waiting to see the latest revisions to see what last week it was 227. So last week was revised up, and this week we come way down to 218. On a continuing basis, 1,871,000. That is down from 1,894,000. So it does look like workers are still on the job. Companies are still holding on to their employees.
Yield's a little bit higher off the back of this, Mike. So we're up 3 or 4 basis points on a 10-year to 4.14. On a 30-year, up 3 basis points, at least at a 4.35. You put this together with jobless claims and together with payrolls, together with ISM, services, manufacturing improving. It's pretty decent data over the last couple of weeks.
If you're looking for cracks, you're not finding it. When people say, well, just fast forward, look at the real-time data. Well, here we have the real-time data, and it's confirming the strength that we saw last Friday. The 10-year yield, I'm noting, really taking a leg higher, 4.15% rounded up. To me, that's what I'm watching. Longer term, what does that suggest about the neutral rate and about long-term momentum underneath some of the recovery we've seen?
Don't ask me, because we can have that conversation right now. Real-time reaction with the Richmond Fed President Tom Barak and alongside Bloomberg's Mike McKee. President Barak, good morning to you, sir.
Thanks for having me here, and I am happy the data didn't surprise.
Well, let's talk about this data. Let's talk about how much weight you're putting on it. It's really strong coming out the gate for 2024. How much weight are you putting on this stuff at the moment?
Well, I think the data has been remarkable, and it's been remarkable across the board. Yeah, the fourth quarter GDP, 3.3%, the jobs numbers last month. And I think all of them do talk about an economy that's fundamentally healthy. That's a great thing. I am always cautious about numbers around the turn of the year. I mean, there are big seasonal adjustments. A great example would be the jobs numbers last month. The actual jobs were actually down 2.5 million because a lot of the retail folks who were hired for Christmas, then got laid off after. But the seasonal adjustments bring it up to a positive 353. So that's a pretty big seasonal adjustment. I look hard at it. I'm glad to see it coming in. That's the best data we have. But I'm not sure I'm going to take too much out of any one month.
Markets are obviously interested in if and when the Fed is going to cut, emphasis on the when. And I know you've said we don't have to be in any rush. But with the data like this, basically, are you telling people, we're doing fine with rates where they are?
Well, I have said you don't have to be in any particular hurry. You've got a dual mandate with employment and inflation. And the employment side of the mandate, I mean, it's actually operating at historic levels, 3.7% unemployment, job gains we talked about, initial claims. job openings. It's a very strong labor market still. And so gratified to see inflation coming down, hoping it continues to come down. And I think we've got some time to be patient.
I know you said you don't have a roadmap for rate cuts. Yesterday, Carlyle Group Chief Executive Harvey Schwartz said investors should not be thinking the Fed would cut rates 5 times this year because that would imply something's wrong with the economy. I assume you would agree with him.
Well, it's hard for me to get into the market forecast because there's always 2 elements going on in those forecasts. One is rate normalization under a healthy economy and inflation coming down. But the other, of course, is the economy takes a wrong turn and you'd come down faster. And so those things are a weighted average. To me, there is certainly a model that you take rates down quickly. That's not a model that's good for the economy. That's just one of the things that could happen. And then there's the model where you toggle rates down as the economy comes back into balance.
Underpinning this is really the mystery of the neutral rate. It's sort of this vague, mysterious concept that people throw around. Matt Lazzetti over at Deutsche Bank changed his view recently, saying that he thinks the neutral rate, instead of being about 3% in the post-pandemic reality, might be around 3.5% or even 4%. Does that jibe with your thinking?
It's certainly conceivable to me that it's come up from the estimates that we saw before COVID. The challenge with all these neutral rate estimates is the standard deviation's 200 basis points. And so the center of the S&P, I think, in the last meeting was about 2.5. So it could be 0.5, it could be 4.5. And so I think you have to sort of make your decisions not based on trying to hit a theoretical neutral, but based on what you see in the economy and what you learn about how the economy reacts to rates. And that's what I'm trying to do.
I guess as I'm watching some of the data come in and I hear from all of these investors, they're concerned about reaccelerating inflation later in the year as some of these comps change. Are you also starting to worry about that a little bit more?
Well, we've already had a lot to worry about in today's conversation, so I won't focus on all of the worries I have.
We've got more.
I saw the shipping conversation earlier today.
Lisa specialized in worry, Tom.
Yeah, no, there's a lot to worry about. Yeah. I mean, I think you have to acknowledge how good the inflation data has been for the last 7 months. I mean, the last 7 months, core inflation 1.9%. That's right on target. That's terrific, right? And I'm not rooting against inflation, but I'm always, trust but verify. Let's make sure that's really right. And so we'll get a few more months. It would be, I would very much like to see that trend continue and, broaden, because it's been disproportionately goods deflation that's been masking higher than normal prices in rents and shelter. So I'd love to see it broaden, and maybe it will. The trend is good, and you can't argue with that trend. Let's just see how we go.
How do you parse inflation these days, though? Because, yes, the PCE is down below 3%, but when you look at things like the Cleveland and Dallas trimmed means, the Atlanta Fed sticky wage index, it all shows basically more inflation than your targeted index.
Well, these numbers will converge over time, right? And so what's happening right now in inflation, as I said, is you've got a lot of clawback of goods price increases that happened during COVID. And so goods deflation, which has always been a factor, is even more significant than it has been over the last 20 years. Rents and services are higher. These trim mean measures look at the center of the distribution. And so they're looking at that center part, which is higher, as opposed to the weighted average, which is lower. If it broadens, everything will come down. If it doesn't, it won't, and we'll just see what happens.
Well, how do you make a judgment then on when you think it'll be appropriate to cut? What are you looking for? The phrase I think the chairman and others have used is measurable progress toward the 2% target. How would you define that?
If I could get these kind of numbers sustained and even better broadened, that's what I'm looking for, sustained and broadening.
There was a worry in the news conference, and you could sense that with Chairman Powell, that he wasn't comfortable yet. And I wonder if you're not comfortable either, just with this idea that maybe the improvement we've seen over the last 6 months is down to so-called one-off factors. Do you share that concern as well?
Well, another way to put it is that headline inflation for last year was 2.6%. There was a 3.3% 6-month period and a 1.9% 6-month period. So which do you believe, the 3.3 or the 1.9? So we're rounding now over those 3.3 months. January last year was a very inflationary month. So everything is leaning in terms of the numbers should be coming down, and I expect them to come down over the next few months. But let's see if they do.
It speaks to this risk that maybe we stabilise above target on inflation. And Mike, as you know, the worry is that we do stabilise above target, and if you've started to cut interest rates, you have to start hiking again. Is that a concern that you have, that if you do start to move, you're stuck in that cycle then, and you have to continue, and you can't start hiking again?
Well, you're always trying to be cautious because you don't really want to reverse course. An interesting period to look at is 86. In 1986, at the end of the Volcker era, inflation was actually under 2%. And the Fed, which had tightened significantly, started loosening significantly. In 87, inflation basically doubled from where it was in 86, and the Fed started increasing again. So that stuff has happened in history, and you're certainly aware of that. And to the extent you could avoid it, you'd love to avoid it.
Does that weigh on you as an official, just the experience of Volcker and co?
Well, a lot of people write about the history of Fed tightening cycles don't end well, and so it'd be awesome for it to end well. But as you go study the past, it's not like you study the past and you see lots of great examples that you're just dying to duplicate.
Let me take the other side of the argument, and that is that inflation is going to keep coming down, but you're not going to move fast enough, and the economy is going to slow more than it needed to, or even go into recession because the Fed waited too long.
That's the risk you're trying to balance. And like I said, I take a lot of signal about just how historically strong the labor market continues to be, including the claims numbers we saw this morning. And so you are trying to balance the risk to the employment side of the mandate versus the risk to the inflation side of the mandate. Inflation's still elevated. The unemployment side's still very strong. I think that's how I net out right now.
We were in Jackson Hole a number of months ago. We were talking to some of your colleagues about some of the anecdotes they were hearing in their district. Remember that conversation, Lisa?
Yep.
And the guidance that we were getting from some Fed officials is that what they were hearing in their district was different to what they were seeing in the data. Mm-hmm. Do the anecdotes conflict with the economic data?
Well, I'll give you some anecdotes. I was in Western Carolina earlier this week, just some things that might be interesting. One is that I saw Great Clips had a sale on haircuts for $9.99, and so that's interesting that even some services are coming down in price. That would be consistent with the data. There's a big paper mill that laid off 1,100 people in a county of 17,000, and a year later, unemployment in that county is down, not up, because there were so many openings for people in manufacturing positions that all of the people who were surplus, who didn't retire, had jobs. So that's confirmatory of a strong labor market. I think the third quarter 5% GDP stuff, that wasn't what I was hearing either, and I said the same thing. But today what I'm hearing is people aren't hiring as much, but they're not firing as much either. Price setters understand they're on the back end of the price curve. It's not over yet, but they're on the back end of it. And demand, especially on the consumer side, is still healthy.
Do you trust the data? And I say this because some of the headline data, people have been saying people aren't responding to the surveys to the same degree post-pandemic as they were pre-pandemic. Does that factor in?
Well, you have to always take data with a grain of salt. You also have to accept it's all you've got, right? And you have to be wary of confirmation bias. I like the data when it agrees with what I think, and I don't like the data when it doesn't. So when the data comes in, I take it for what it is. And I try to dig into it and understand, does it, what's behind the numbers, like the seasonal adjustments I was talking earlier. But I accept it and then try to test it, as opposed to rejecting anything that doesn't agree with my prior hypothesis.
I think that Great Clips offer was for mullets for the Super Bowl. Or so did you see anybody walk around with mullets?
You're nice to say it wasn't just because of my hairline that I got a cheap offer.
The hiring that we have seen in recent months, do you expect that? First of all, was it a surprise to see the December, January numbers? And do you expect that to continue, or are we going to fall off dramatically? And will we see unemployment start to go up to the 4.1% the SEP calls for?
I was surprised at how strong the numbers were in December and in January. December revised and in January. What I'm hearing is not as much hiring, but definitely not as much firing. That's how I put it together.
Labor hoarding?
That's sort of the technical phrase, but especially with frontline people. If you have really fought hard over the COVID era to bring people into your factory or into your restaurant, you're just loath to take the risk of letting them go and try to go into that fight again. And so on the frontline side, people are being careful. To the extent that I'm hearing anything on job cuts, it's actually the professional side. It's overhead. In your business, maybe your pricing power isn't going to be what you thought it was going to be. You're worried about the risk on the operations side to laying off operating people. Well, let's take a look at our overhead and thin it. That's where you see it. And some of the jobs announcements you've seen recently, I think, disproportionately look like overhead as opposed to frontline.
Interesting. Seeing a lot of that this morning as well. We've talked about those companies too. There was a moment in the news conference last week where Chairman Powell was asked about the month of March, and it felt like that kind of off the cuff, he just got freezing cold water and poured it all over March. We're trying to work out whether that was Chairman Powell's view or if that's the general view of the committee that you share as well, that perhaps March is just too soon.
Well, I don't ever prejudge a meeting, and I don't prejudge the March meeting. We'll see where we get. But I always think Chairman Powell speaks for the committee.
He was talking about the balance sheet too, and that sounded much more interesting. If they're not going to cut interest rates, maybe they make a decision about QT collectively, the committee, you. Can we talk about that? The decision that you've got to make, is it independent of the interest rate decision for you? What happens with the balance sheet from here? Can you do one and continue with the other?
Independent of the interest rate decision, because you're talking about normalizing, and when is the right time to start normalizing rates, and you're talking about normalizing the balance sheet. So we're still in the process of doing that. As Chairman Powell said, we'll have a conversation about it, and I think it's great that we do that because you want to plan what you do. I still haven't seen any signals that we're closing in on the level of ample, at the end of the ample reserves regime. Just a number that keeps hitting me. If you add up the overnight RRP plus the reserves today, we're still over $4 trillion. And if you look at September 2019, we were in the 1.2, 1.3 trillion in reserves without an overnight RRP and without a standing repo facility. So I think we're a pretty long way from where we were then. And, times change. We'll see where we are. We've got to learn more. But I still think we're a long way from where we were then.
You know where I'm going, because you do hear people say that if you start cutting interest rates, but you're still doing QT, they're sort of running in opposition to each other. Do you not see it that way?
Don't.
We'll leave it there. Tom, you're going to stick with us. Tom Barkin.
Blunt
and to the point. We appreciate it. The Richmond Fed president is going to stick with us. Let's get you up to speed on some top stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Citi is weighing a move to cut 10% of its wealth employees in London. That's about 51 positions. According to a memo seen by Bloomberg, Citi's wealth business is, quote, continuing to identify areas to improve efficiency through structural changes and cost-based reductions. Citi is in the middle of a vast restructuring that will see the bank cut 5,000 jobs before the end of this quarter. Shares of Ralph Lauren are rising after its third quarter earnings beat estimates. The company saw total comparable sales up 9%. That's almost double what analysts had expected. Ralph Lauren's CEO says the results, quote, exceeded our expectations, led by continued momentum in direct-to-consumer channels. The U.S. Supreme Court will hear arguments today in a case which could decide whether Donald Trump can be excluded from ballots. Lawyers are expected to argue that his involvement in the 2021 Capitol Hill insurrection violates the 14th Amendment. Trump's defense will argue this provision doesn't apply to a former president. If Trump were to lose the case, he could effectively be barred from holding the presidency again. And that's your Bloomberg Brief. John.
Hey, Danny, thank you for that. Up next on the programme, banking crisis concerns creeping back in.
I do have a concern about commercial real estate. I believe it's manageable, although there may be some institutions that are quite stressed by this problem.
That conversation continues just around the corner. In the equity market right now on the S&P 500, equity futures negative by 0.1%. Yields higher by, let's call it 4 basis points on a 10-year, 414. Jobless claims come in lower than.
When you need a fighter, you need us. I'm John Morgan of Morgan & Morgan. Most insurance companies are big, really big. Imagine you're injured and now you have to fight for justice. Our results and reputation are well known to the other side. As America's largest injury firm, our Army will fight like hell for you. We have the resources to take on the biggest insurance companies in America. When you're fighting to get what you deserve, it's go big or go home. When you need a fighter, you need us. Morgan & Morgan, America's largest injury law firm.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
"42 minutes away from the opening bell in New York. Equities doing okay. We're negative 0.1% on the S&P. Yields a little bit higher following better than expected jobless claims. The right kind of downside surprise, as we like to say. Yields are higher by 2 or 3 basis points on the 10-year, 4.1463. Under surveillance this morning, banking stress concerns creeping back in.
I do have a concern about commercial real estate. Commercial real estate is an area that we've long been aware could create financial stability risks or losses in the banking system. And this is something that requires careful supervisory attention.
Here's the latest this morning. Investors looking for signs of financial stress after fears in commercial real estate sent shares of New York Community Bank plunging to a multi-decade low. The pain also found in Europe and Asia as banks across the globe prepare themselves for potential losses in CRE. Richmond Fed President Tom Barak with us around the table this morning together with Bloomberg's Michael McKee. Tom, it's fantastic to continue this conversation. The worries of the banking sector of last year, different this year. Last year was about working through interest rate shocks. Now it's about potentially credit stress. Is this coming up on the committee? When you saw that in NYCB last week, the day of the decision, is this something you all talked about together collectively?
Well, commercial real estate, as the Secretary said, is a known issue, and it's an important issue. I was in D.C. yesterday doing a roundtable with some real estate executives. That's a market that struggled to come back. And you can feel the stress in the commercial real estate area, particularly, of course, downtown office. So that's a real thing, and the banks, many banks and non-banks have exposure to that. That's an important thing to take into account in terms of stability. But as I say, it's not a new kind of risk. I mean, we have had real estate shocks before. We've gone through real estate cycles. It wouldn't stun me if, a bank or two ended up wrong-footed in those things. But the system knows that real estate is a, asset with a certain amount of risk. And I hope and expect that, we've got enough capital to weather that.
A lot of people have speculated that the Fed would cut rates in response to another bank failure. Do you think that that's an accurate assessment, or do you think that that is not the correct channel of response? Because that's basically what's baked into the market, a lot of people are saying.
Mandates, employment, and inflation, you've got to take into account what you think is going to happen to employment and inflation. If the economy is to turn south, I mean, that's a case for trying to normalize rates faster, but the economy would have to turn south, as opposed to this being some sort of a bank oversight response.
The chairman said that this is a manageable problem, commercial real estate. But I want to ask if you think that in the context of Fed officials, including the then chairman, telling us in 2007 that real estate was not going to collapse.
Sorry, and your question is?
Do you have a good handle on this? Can you be sure that this is something that's manageable?
Well, in the banks that we supervise, I mean, we're spending a lot of time with them and productively going through real estate assets and trying to understand what the risks are and what the reserves are against those risks, and making sure we've got those things appropriately handled. So in the scope that we've got, we're working hard on that. I think you never know what you don't know. And so, what might happen in the non-bank sector, don't know. What could happen, with these real estate assets, we'll see. But I think we've got our head down with the banks that we oversee, trying to work through it.
Well, does this weigh on your thinking at all about when you might want to cut interest rates? The story that the real estate people tell is that this problem is only going to get worse over time as companies get closer to their refinancing.
I think it's important to take commercial real estate apart. I mean, there are huge parts of commercial real estate that are quite healthy. Data centers would be a good example. Retail is healthy. At least the holding part of multifamily, the building has its issues. We're really talking about office in a narrower, B and C downtown office space. That's where the biggest risk is. And I'm sure there will be losses, and already have been and will be losses in that space. But as I said, it's a known variable. If you go back to our stress test assumptions, you'll see pretty significant stress on commercial real estate valuations, and you saw the outcomes for the bank. So
There are a lot of known variables out there, which is the reason why we're so worried. And you said there's a lot of worry around this table. We were worrying earlier with a bunch of credit people who are no longer worried because somehow some of these maturities are not an issue. How do you understand the fact that people were talking about zombie companies, they were talking about zombie real estate, they were talking about how the world was going to be turned on its head when the Fed raised rates by 5.5 percentage points? How do you make sense of the fact that that just hasn't happened?
Is it possible that some of them were wrong? I'm just not sure. But if it's not that, if it's not, here are the numbers that have really spoken to me, which is if you look at the total interest burden for individuals and the total interest burden for companies, and you divide that total interest burden today by total revenue for companies or total personal disposable income for individuals, the numbers have finally now, in the aggregate, just gotten back to 2019 levels. And so what does that mean? There are a lot of people, individuals, who refinance their mortgages or paid down their credit cards. There are a lot of companies that refinance their debt when rates were very low. And so there are absolutely companies that are wrong-sided, wrong-footed in this. But in aggregate, this total interest burden hasn't yet hit the country in that scope, I think, that a lot of people predicted. It could. I mean, that's a good reason to be cautious on the economy. On the other hand, the continued month-over-month health of demand, look at GDP for the last half of last year, sort of argues against it. But that's what you watch.
We've got about 2 minutes left, which means we should probably talk about something you definitely don't want to talk about, which is politics down in Washington. When senators and officials in Washington start to write letters to the chairman to ease policy, how does the committee respond to that? It's a big election year. You talk about live meetings. We're wondering how live some of the meetings are going into that election. How do you avoid getting into politics?
Listen, I think the chairman was brilliant on 60 Minutes, and if you watched it, he sort of closed with a very clear answer to that, which is we just try to do the right thing. And I think his phrase was integrity is priceless, and I thought that was very well put.
The chairman on 60 Minutes also talked about the urgency of the fiscal health of the country. CBO yesterday, debt will hit a record high. So much of that is for net interest payments. Is that a reason to potentially cut rates?
I assume you'll have other people on and ask the question of whether it's to cut debt. I mean, there's two ways you go. I think we're trying to focus on inflation and on unemployment, and I think having rates be in restrictive levels is good for the long term. And if we can get inflation down to where we want to, and if employment can stay in the right place, rates can normalize, and that'll reduce that burden. But our objective function is not around the country's debt burden. Our objective function is around what Congress has asked us to do, which is inflation and unemployment.
Tom, it's good to see you. Thanks for catching up.
Thank you for having me back.
Appreciate your time, as always. Richmond Fed President Tom Barak in there alongside Bloomberg's Michael McKee. To round out the programme this morning, just a brief look ahead to tomorrow. Jay Poloski of TPW, Thomas Kennedy of JP Morgan, Dana Peterson of the Conference Board, and US Air Force veteran David Depchula, now of Academy Securities. Bramo, a lot to talk about with that crew.
Yeah, especially if Maersk sees it resolving, at least in the near term. Let's hear what he has to say with respect to the Red Sea.
34 minutes away from the opening bell. Equity futures negative here by 0.1% on the S&P 500.
What was that?
It's my back again.
It says here it could be kidney stones.
Nah.
Stoneman syndrome.
No.
Yep.
Stoneman syndrome?
Coccidioidomycosis.
Daddy, I can't sleep.
Daddy has bird flu.
Stop searching. Start knowing with MD Live. Get real answers from real doctors real fast.
I knew it wasn't serious.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities
are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
So let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
From New York City, for our viewers worldwide, I'm Menace Crenny, in for Jonathan Farrow. Just looking at these markets, smelling the 5,000 line. You've got a whole new world for Disney, and you've got tech on fire with ARM. But we are prevaricating at the 5,000 mark. Countdown to the open kicks in right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up in the show, futures fluctuate. The rally that drove the market to fresh all-time highs. The bond market faces its next big test, another auction. And ARM and Disney impress investors. We begin with the big issue. The Fed preaching, you got it, patience.
You have to acknowledge how good the inflation data has been for the last 7 months. I mean, last 7 months, core inflation 1.9%. That's right on target. That's terrific, right? And I'm not rooting against inflation, but I'm always, trust but verify, let's make sure that's really right. And so we'll get a few more months. It would be, I would very much like to see that trend continue and, broaden.
It's about the breadth of the good news. Joining me now to discuss the Fed and more on markets, it is Morgan Stanley's Vishy Tripatur and Mona Mahajan at Edward Jones. Mona, I mean, it's tantalizing, isn't it? 5,000 on the S&P 500. We are on fire. Risk is on fire. Can we live long and prosper without 5 rate cuts as far as risk and equity markets is concerned? Good morning.
Good morning. And yeah, it's a great question. Look, we've looked at what happens when January is higher. There's that old saying in the markets, so goes January, as goes the year. And so January was up about 2% in the S&P 500. When we look back since 1950 there's been 44 years when January has been higher. 39 of those have been followed by a positive full-year return, and positive by an average about 18%. So while history may not repeat itself, we certainly have a precedent for January leading the market for a full-year gain. Now, all that being said, we're looking at the fundamental backdrop, probably more so. And this year, we are facing an environment where the Fed will likely pivot to rate cuts. We are seeing inflation continuing to moderate. And by the way, we have an economy that's holding up pretty nicely. So we think those combinations combined could lead us in a better direction. Now, keep in mind, we have had a very strong move, 22% higher since that October 27th low in the S&P 500. Could we be due for a period of consolidation or pullback? Yes, absolutely. But we think that the Fed is likely to cut rates probably in that 3 to 4 time range, or 3 to 4 cuts range that they have been telling us, and that we think could lead to better outcomes ahead.
Okay, still in there for the 3 to 4 rate cuts. Vishy, good morning, good to see you. We'll talk more about Barkin and the Fed in just a moment. But if I look at the bond market, 414 is where we are on 10s. The truck has been backed up ever so slightly. So my question to you is, we've shown up to buy paper this week in 3s and 10s. Does that continue for 30s today?
I would expect that. I think if you look ahead, we expect to see 4 rate cuts of 25 basis points each starting in June over the course of this year. And we think both from a technical perspective and a fundamental perspective, this sets up the duration to be in a really good place. So we would be constructive on duration going forward. I don't want to get too caught up in a sort of the day-to-day, week-to-week changes in the level of rates. But I think the underlying conditions are that we are looking at a Fed that is going to be easing policy, cutting rates, not only in 2024, we expect more cuts to happen in 2025. So on the back of that, we think that the outlook for duration is pretty solid.
You're beginning to sound like the Federal Reserve there in terms of not getting caught up in the minutiae of the day-to-day. But we can, of course, dig into the day-to-day. The Richmond Fed President, Tom Barkin, sat down and spoke to the team. Mike McKee led the conversation on this growing chorus of officials tempering our hopes for rate cuts. Mike, good morning. Good to see you. Great conversation with him. He just didn't take the bait on a couple of occasions. He likes the narrative on inflation, but it's got to broaden for him, doesn't it?
It has to broaden out. He does agree that they have met their mandate on employment. And you look at jobless claims this morning at 218,000, lower than anticipated, going in the opposite direction of last week's big jump in jobless claims. He says that the labor market is in very good shape. And what Tom Barkin has noticed from the CEOs in his district is that people are slowing their hiring plans, but they are not letting people go. It was so hard to find workers that right now companies want to hold on to people. And the layoff notices we're seeing basically are a trimming of overhead, not of production kind of workers. So, as you mentioned, put him in the camp with the others that we've heard from over the past week. 9 Fed officials, hadn't even been a week, basically. 9 Fed officials, all of them saying later this year, basically pouring cold water on the idea of a March rate cut. And even May is iffy at this point. They all want to see, as Barkin said, inflation coming down and the disinflationary effects broadening. Now, there was a warning for the Fed in yesterday's testimony by Janet Yellen up on Capitol Hill, the Treasury Secretary. She's going back up there today. She told people yesterday commercial real estate is an area we've long been aware could create financial stability risks or losses in the banking system, and this is something that requires careful supervisory attention. Tom Barkin endorsed that latter part, the supervisory attention, saying it's not something you necessarily want to cut rates over. But he did say we will see continued problems, continued losses in commercial real estate, particularly for offices, but it should be a manageable problem and that they are on top of it and they're working hard with the banks to make sure there's no systemic issues.
I like the phrasing that he used. Instead of losing a bank or two or a bank or two going under, he said a bank or two may be wrong-footed, but of course it depends the scale of the wrong footing. I've tripped a few times in my life, and some of them can be pretty bumpy crashes. Mike, thank you very much. Mike McKee with the Richmond Fed. Mr. Barkin, Vishy Trapatur and Mona Mahajan are my guests this morning. Vishy, let me take it to you. It's interesting. Barkin talks about reminiscing 1986. Inflation was 2%. 87, inflation doubled. The Fed had to hike rates. This is the ghost. This is the ghost that haunts them, isn't it?
Indeed. I think the way we would look at it is, how much of, we have clear evidence that the clear evidence of deceleration in the pace of inflation. So on the face of that, on the back of that, if you look at how much of restrictive monetary policy, how much of restriction is required in the economy, and if the Fed doesn't do anything, it just stands pat where they are, we are adding more restriction to the economy, and how much of that is required, and for how long. I think that's the crucial judgment that the policymakers will have to make. And we think that the extent of the restriction that is required would no longer be needed. We think that timing would be around the June timeframe, and there was some risk of a May. But we think really our base case remains June. We think the real question is how long the economy needs to be run at this increasingly restrictive monetary policy. And our response to that is that it doesn't. Therefore, the motivation for the Fed is not really to stimulate the economy, but simply to move back the monetary policy into a more normalized monetary policy.
So, Mona, more normalized monetary policy, you say the sweet spot is 3 cuts at 4. In a sweet spot environment, where do I want to be most exposed in the equity market?
Yeah, it's a good question. And, just to broaden that Fed conversation out, if they do 5 to 6 like the market expects or more, we could be in an environment where the economy is moving more south than we would like, and that's why they need to cut more. If they went 2, 1, or 0, it could mean that inflation has started to...
Are you seeing any flashing lights that concern you about that? I looked at delinquencies yesterday. I look at some other credit card. I look at the amount of leverage in the system. The savings are dropping off. I mean, if you put them all together as a concertina, there are some amber lights.
Yeah, I think there is a case to be made that the economy could slow from a very high pace of gains. We've seen 4.9% in Q3 and 3.3% annualized GDP growth in Q4. That is above trend growth. Could we slow to what we're calling sub-trend growth of 1.5% to 2%? Yes, but we're not yet seeing the signs of any sort of downturn or negative growth in the economy. So we think a period of sub-trend growth could be likely, but by the back half of this year, given rates may be lower, inflation we think continues to moderate, we could see better trends ahead. And so to your point on where do we invest in that environment, well, we do think there is a broadening of leadership that probably plays out in the next 12 months or so. Last year was very much the year of the Magnificent Seven, the mega cap tech trade, and the year of cash and CDs. We think this year we see, you don't want to wholesale give up on the AI trade. It isn't a long-term secular bull market, but you want to complement that with parts of the market, the S&P 493, as we like to say, but cyclical parts of the market, even across the cap space. Think about the mid-cap space, which could play some catch-up. And then to Vishy's point, investment-grade bonds, continue to remain attractive here. Not only can you lock in some of those better rates for longer, given the longer duration, but the potential for price appreciation is still there, we think. So balanced portfolios, we think, will be the theme this year versus very concentrated, narrow portfolios of 2023.
Yeah, I mean, there were certain just real sort of hooks to hang our hats on last year. Vishy, you also would say that the Fed will cut the pace of QT. Now, can you co-join that pace of cutting QT with rate cuts? Do they jar against one another, I suppose, is what the market will ask?
So we think it's the pace, what we'll call taper. We think that the likelihood that the tapering of the QT, the quantitative tightening, will begin to happen sooner than what might be what we thought some time ago and what might be in the market expectation. A taper it would mean I think the idea of an earlier start to taper is to be proactively manage any potential challenges that come in the funding markets. So we think a taper is probably going to happen, an early start to taper going to happen. And a taper doesn't necessarily mean end of QT. So a taper, actually, an early start to taper could actually mean the quantitative tightening, the balance sheet coming down could actually go longer, but happens much more orderly to prevent challenges cropping up in the funding markets. So we think that the QT will end. Our base case remains that it will end sometime in early 2025. But this moving the taper forward, we think will help mitigate, at least address some of the potential challenges that could be there in the funding markets.
From your side, Mona, what does a shift in QT mean?
Yeah, look, when the Fed was, Treasury was bringing a lot of Treasury bonds to auction in 2023, in fact, over $3 trillion worth. And there was a concern that the demand side wouldn't be there. And of course, that was because the Fed was no longer a key player in the market. They were implementing a very strict QT. We saw foreign economies, maybe there was a thought that China was not buying as much Treasury, although we saw an offset by the rest of the world. Mm-hmm. Keep in mind, even at 5%, at 5%, a U.S. Treasury to the rest of the globe looks pretty attractive. But as we think about the environment moving forward, that $3 trillion of Treasury auctions only going to move higher. So you need the demand side of the equation to be there. The supply side is going higher. And so if the Fed does taper its QT, as Vishy suggests,
Morning,
we think
traders.
that means that the Fed is now at least somewhat in the market, a
Happy
buyer
Thursday.
of Treasury
Can I
bonds
get a
once
sound
again.
test,
That puts
please?
a little bit less pressure, upward pressure on Treasury yields overall. And that's really the goal of what they're trying to achieve here. They want to get gradually towards a more neutral level of Treasury yields of a Fed funds rate. And I think the combination of lowering the Fed funds rate gradually plus eliminating QT
Welcome, traders.
gradually
Welcome
over
to a
time as
terrific
well
Thursday
puts that
morning.
downward pressure on yields.
Hope you're
and
well.
gives
Hope you're
us really a
relaxed
better
and
balance in
charged and ready for
the Treasury
this
bond market
brand
overall.
new trading day.
And that lowering of rates here in the United States, Vishy, just to talk about beyond borders for a moment,
today.
you
Equities,
are
crypto,
tempted towards
the
emerging
likes
market
are
debt.
moving.
Any region in particular?
Definitely lots to happen.
It's, I think the
in
opportunity
this day.
set
We've
is
had
somewhat
earnings,
better.
had so
Still
much.
remains
But
the
before we
US
get to that,
over
let's
the
say
rest
good
of the
morning to
world.
everyone,
That
and
remains
then
the case.
get started.
But I think there are
and talk about
pockets
what's
of
going on
higher quality
in
emerging
this
markets.
trading
The
day.
investment
So,
grade part of the
good
emerging
morning
market
to those of
is
you.
what we
Firstly,
will find the
on
sovereign
social
credit
media
risk
and
credit
on
risk to be
YouTube.
more,
Great to have you here with us.
more attractive.
Great to
So
see
we'll
you
still,
tuning
even
in
within
each
the
and every
emerging market
day
world,
and,
we will lean
contributing to this
towards the
community.
higher quality
Always great
end
to
of
have you. And just remember to smash that
That
like button.
is a fairly complete conversation on these markets. Let's see, I thought Barak really did hang on to the 1986 redux and the risk to 87. Vishy,
Jeremy,
Tripita,
and good morning
and
to
Mona
Evelina.
Mahajan,
Good to
thank
see
you
you
very much for
both
being with
on
us. Let's look
YouTube.
under
And
the
to
hood
those of us
ahead
in
of
the
opening
room,
bell.
good morning
Katie
to you all.
Greifeld
Thank you for the
is
sound
with me.
test. Great
Katie,
to
what have
have
we
you
got?
here with
Let's
us.
start with PayPal because it is plunging pre-market. Of course, it reported and it issued
let's
a
get
disappointing
started.
2024 outlook, which Wells Fargo
First
said
up,
would, quote,
good morning to you,
vindicate the
Clifton.
Perma
Good
Bears.
morning,
Certainly
Aggie.
seeing some
Good morning to
vindication
you, class.
this morning.
Good
You
to
have
see you.
Disney,
Good morning,
though,
DVG.
dominating. First quarter earnings beat
And
expectations
yep,
with a full
DVG
year
is
profit
watching
forecast that was seen as
tech.
strong.
He's
The
also
international
watching
parks
crypto
business
as
also
Bitcoin
showing strength.
blast
It
through
also boosted its
45K. We
cash
spoke about
dividend
the
by
build up to that
50%.
yesterday. We were
Said it's
there
targeting
live
$3 billion
tracking it
in buybacks
and
this
watching
year.
that
That's good for 8%
43,500 to
pre-market, and we have to
44K
talk
to
about ARM. It is
45
absolutely
push
soaring. The chip designer,
yesterday
it beat
afternoon during
mightily. It
lunch.
also
Good morning
gave
to
a
you,
bullish
Davide. Good
outlook.
morning,
This company
Steve.
has been pushing
And
beyond
good morning
smartphones, and that's
Cesar.
paying up. The stock
See
is
you.
up almost
And
27%.
today's your birthday. Happy birthday, Cesar. I hope you have a wonderful Thursday morning in the room, in the markets, and hopefully a green one. If not, that's fine. You still have life. You still have us, and we're still all together. So it's going to be a great day either way, right? Good morning to you, Mark, and good to see you. So traders, let's get started quickly. And yep, I think the YouTube is going to be sorted soon, traders, in terms of that volume. We'll get it sorted for you if you can hear me. So traders, please be aware that trading securities is risky, and our past performance as analysts is not typical, as we are experienced traders, and none of this is to be seen or taken as investment advice. Remember, most beginner traders lose money, so first start on demo, and then when you're ready to go live, only trade with money that you can afford to lose. All right, so let's quickly go through the news so far this week in crypto. We spoke about Ripple and the SEC. We spoke about the SEC approving new rules to integrate crypto into the federal oversight by providing rules on how to monitor liquidity providing entities. And then the CME, the Chicago Mercantile Exchange, saw a significant increase of 35,000 in its trading volume, 35%, sorry, in its trading volume to reach 94.9 billion, the highest level since October 2021. And the surge coincided with the SEC's approval of spot Bitcoin ETFs. And staying on Bitcoin, we have smashed through 45K. We spoke about it a lot yesterday. So for those of you, coin is gapping up. Watch miners as well. If you take a look at Scott's picks and Meir's picks, you'll see Meir has coin, Mara on his list. We also have Disney, as we had some big earnings yesterday. I'll quickly bring them into the picture. You can see we had Baba, we had PayPal last night, Disney, ARM, Wynn Resorts, ARM gapping up, Disney gapping up, Disney pledging to spend 1.5 billion on Fortnite, or invest 1.5 billion in Fortnite. Epic Games, if you guys know about Fortnite or Epic Games, it is one of the biggest games out there, especially if you have kids. The younger ones are loving it up, and Disney is jumping into that. I think it could be a very good move for them as the game continues to evolve, and not necessarily good news for Roblox, right? As it is a similar type of game and in the space. But with that, though, something that you should be watching today, as we head into the close, Pinterest Affirm. We also had Spirit this morning, and Expedia, usually one that moves a lot during earnings, so keep an eye on those. And as I said, watch Coin, watch the miners in Mara, Riot, and all of those. They could be moving today with crypto moving higher, as DVG and is watching crypto as well as some of those he highlighted, and I think it's definitely a good point there. In terms of news, we've had unemployment claims come in. We've also had FOMC member Barak speaking on a Bloomberg interview this morning. Didn't really say much, just kind of said he trusts what Jerome Powell says. They've had conflicting numbers in terms of the economic performance. Nothing given away as such. The market hasn't moved too much. Futures slightly negative. That's easy to do given we closed at the highs. We printed new all-time highs yesterday. So very much an interesting open ahead. And unemployment claims came bang in line. Not really much to move the market. And we do have those bond auctions. We had them yesterday at 1 p.m. or 1:01 p.m. The market moved up a bit, then came down, but then eventually continued higher into the close. And let's see if that makes a difference today. So let's quickly take a look at the charts, and then we can take a look at what's going on. So Ethereum continuing that move yesterday, pushing past that 2400. Very good to see that. And just like Ethereum, Bitcoin pushing, oops, that's Bitcoin Cash. Let's take a look at Bitcoin. Bitcoin pushing past that 44,000 that we spoke about and looking like it can continue now for the ride. And hopefully we can get it to 46 where we can start to scale out. And then Solana also trying its best to reverse and go higher. Defended the support area around that 92 and possibly towards that 107. We've been talking about these moves for quite a few days now, especially from last week. Avalanche trying but not moving as well. And these ones are definitely doing the business, following along with these. And hopefully we can see some continuation in this space, and that's going to bring more volatility, more volume into the Bitcoin or the crypto related ETFs and stocks as well. So keep an eye on all of those. Should be a very good Thursday morning and Thursday entire trading day. I think it should be a good day as we've had a relatively quiet week, but we are starting at the close to the all-time highs. So let's see how things go there. So that's it from me, traders. Wishing you a wonderful trading morning and a green session. I'll see you a little closer to lunch. So take care. Bye for now. And Scott will be up next to kickstart your day when it comes to stocks. Cheers.
Good morning and welcome to the Tradenet Trading Room. Welcome to an exciting Thursday. And if you've been with us all week, not an easy week to trade by any means, but I'll tell you what, as we get closer to the weekend and as things start to continue to have that volatility, we always have the opportunity out there. And with that opportunity, oftentimes comes profitability. What I've been noticing the last couple of days, we talked about it a little bit yesterday, was our urge to get into these stocks ahead of time, early, maybe too early during the day, and that has cost us some early morning trading. 2 of the 3 days of trading, I've been red to start the day and have bounced it back to green once I got direction of the market and a better understanding of where the stock was going. So today, strategy-wise, I'm going to wait on the open here. I'm not going to take, unless I see a great trade, I'm not going to take the opening trade. And this is, to me, I think a better way to go instead of rushing into a trade. So we'll watch that. We got a good volatile market this morning, good movement. And hopefully everybody's ready to rock and roll today on this Thursday. Going to be a fun day as usual. And good morning to all in the room, and good morning to everybody on social media, on Facebook, Twitter, Instagram, StockTwits, YouTube, and everybody alike. We just appreciate you taking the time to be with us here this morning and be part of the greatest trading room on the planet. So again, thank you, thank you, and thank you. And if you are in the trading room on YouTube, smash that thumbs up button. I just did this morning. I want to welcome to everybody to Peak Trader, to Neta, Evelina, and the rest there. Good morning to all on YouTube this morning. Thank you for joining us. Now, as we get the day started today, let's talk about these. Let's talk about these stocks here, and let's talk about the futures as to what we're doing today. We'll start off with Asia in the overnight session. We saw the Nikkei gain 743 points on the back of what happened here in the US of A, up over 2%. Hong Kong Hang Seng down 204 points, down 1.27%, in the Shanghai up 36 points, 1.28% higher. Europe green across the board. German DAX up 95, FTSE in the UK up 4, and the CAC 40 in Paris up 70 this morning. So when you combine that with Asia, you've got 5 markets up, 1 market down, putting pressure on the US futures to the upside this morning. And we've got kind of a mixed bag this morning, really. The Dow futures are up 30, S&P futures down 4, and the NASDAQ futures down 18 and a quarter. So mixed to open. Oil on the good note here, oil up $1 and a penny this morning, 74.87 per barrel. And if you're in the gold space, gold's taking a little pullback this morning, down $13.90 per troy ounce, down to $20.3780 per troy ounce. Silver's down, copper's down, platinum's down, palladium is down too. What do we have going on? Well, Disney, big news in Disney, popping 7% in the pre-market after earnings beat and announcing that they're going to be working with Epic Games to start working on more games and integrating all of Disney's companies into gaming. Also, an ESPN standalone app coming out as well. So interesting. Google now rebranding Bard AI to Gemini and launching a new app subscription. More on AI along Google in there, Microsoft in there, Apple in there, NVIDIA in there as well. Oil up again today for the 4th day, and that's a big move on the oil patch here. Apple in the news, also calling its Vision Pro a spatial computer. And again, if you've seen, I'm sure if you're plugged into the tech world, you have seen the Vision Pro and what it does, and it just really brings your desktop or any type of computerized information right to your goggles, right to watching and waiting here. So it's really kind of cool. I've seen a lot of video on it. I have not tested out myself. My brother was out into the Apple store and had the free product test, which he thought was awesome. So anyway, wait to see on that. All right, so futures up. Oil down, oil up as well, and we're pointing in the right direction here as we get into the pre-market here this morning. We do have a couple of IPOs today, KYTX and PMNT, and I want to say good morning to everybody here in the room individually, and we will go from there. Good morning, Daniel. DVG, good morning to you. Great to see you here this morning. Klaus, good morning. Seth, good morning to you. Perfect. Tony, good morning to you. Listen, traders, it brings up a point. We had a wonderful interview with Tony C, as you know, last week. And if you want to be that second person in line, get with Clifton. Give Clifton your name. PM him this morning. And we'll get you on the interview docket here. We'll go through the process. Let you share your journey with everybody here in the room and on social media. And that's only good, and that's only the way to do it here in the Tradenet trading room. Kind of share your experience. Get it out there and allow other people to learn from what you have done in this beautiful world. Okay, let's pick some stocks this morning here as we get ready to rock and roll today. We got about 3 minutes before we start the day. And I'm looking at Tesla first thing this morning, and Tesla long over 189.50 this morning, 189.50. Why the round number? Why not the round number, right? That's where people start to buy and invest into the trades. Also, Meta this morning on the short side here, unless this stock takes out yesterday's close at the 469.59 or 469.60. That would be a buy to the long side, but it is down this morning. So we're going to go short under 468. That's Meta short 468 this morning. Again, I could turn on a dime on this stock and take it long the same breath here as I'm taking it short. Also this morning, we've got Ralph Lauren reporting good earnings here this morning and good outlook. That's RL this morning, and that's to the long side here over the 159. We've already been there, done that, but on the pullback, we'll rev up and probably take it over 159. And what a day would be without talking about Disney here on their earnings day here. 107 long on Disney, pretty easy to pick out there at the top of the range. Okay, with that being said, what about stocks like PayPal this morning? Down pretty darn big this morning. We'll bring this into the viewer here. This is my desktop here. This is what I'm looking at. Same thing as what you're looking at this morning. Down big time here over yesterday, 63.34 close, now at 57. We'll watch this stock. This could be a really nice short this morning. Microsoft, I would not put it past it to take it long here this morning. I'll post this here at 414.10. This is MSFT, another stock to take a look at this morning, 414.10, and that is over yesterday's close. Okay. All right, there's my picks. We've got with us here this morning, Craig Nehemiah is in the house. You heard from Craig. One of the only rooms on the planet to feature both equities and cryptocurrency trading here live each and every day. Clifton, our Tradenet support manager, is here. You heard from Aggie before yesterday. Michael will take you through lunch today. I will be back to take you through to the closing bell today. Working hard this week, each and every day, to bring you the best content that we possibly can. Our leader, good friend of mine, Meir Barak, will be joining us, I think, this morning, out a day early or back a day early. Was anticipating him tomorrow, but hopefully we get him back today on this Thursday. So buckle up your seatbelts. We're ready to rock and roll here. 35 seconds before the opening bell. There he is. Good morning, Meir. How are you?
Hi, everyone. Good.
Good to hear. Good to hear. I hope the trip was awesome. Come to church.
It was great. Really enjoyed.
Yeah. Awesome. Good for you. ARM this morning. Let's take a look at. Yeah, ARM looks great. Over 100. I'll keep that up. Thank you for that. Klaus Provicio. Yep. Over 100 ARM. I'll post it here too. Get Meir to get the charts up. Their charts are live. Charts look good. We are set to go.
Great. Hi, traders. Good to see you all. Welcome, our traders, in our YouTube trading room. And of course, those of you who are here, please don't forget to hit that like button for us. Now, there's plenty of movers today, although the market starts flat. S&P and Nasdaq are flat. Overall trend is definitely up. And if you take a look at the daily of the S&P 500, you can see that we're looking at a potential very strong breakout. It is a very interesting breakout formation. Now, I do follow some stocks which could be big movers today, like Disney, which is up 8% right now. Starting up, I would like to see it coming down first and then moving up. Should be a gap and go. PayPal is down almost 10%, but the initial move is down. Therefore, it's a little bit tricky to trade it. I'll have to wait until it moves up, assuming it will. Not sure what's going to happen there. There's this DT stock, which starts down almost 10%. But not likely to have a lot of volume, and I can already see that it's a bit spready. I'll take a look at that later.
Watch ARM here. Here comes ARM. Watch the 100 on ARM. I'm going to be taking this long at 100. There's the 100. I am long the stock.
Baba is weak.
104.
2.3%.
ARM.
Why is this stuck?
I know, right? Great earnings, great everything, and it's just total sideways here.
Yeah. So I'm going to short Baba under 71.70 under the lows. I'm short.
Okay, traders, I am going to take a Microsoft trade here. MSFT.
Oh.
Long.
Spiked up.
14.10.
No reason to get panic. I'm going to go long Disney, going long right here. Sorry, didn't have time to post it over 107.60.
I just woke up, huh? Comes
Yeah.
on, looking good.
Oh, it was kind of silent, didn't really move. Oh, wow, that's a nice move. I'm getting ready for a partial.
Okay, ARM looking great.
Now,
I'm going to come out
took my
102
partial on
traders. 102. 102.
Took my partial in Disney. That was a quick trade.
Yeah.
And it's still going.
102, 15 cents, 10 cents, 102.07. I am out. 3/4 of the trade ARM, ARM. 200 shares left, ARM. I'm long Microsoft as well. Anything under 101, I'll come out of the rest here on ARM. Traders, powerful room. Those of you that are on the outside looking in here, we've got such a great room. This ARM trade was not my trade. This trade was brought to my attention by Fabricio and Klaus this morning. Thank you, thank you, and thank you for this trade. Going to be looking at 3 points now on ARM. Hopefully you've joined me. Great trade, guys. Thank you.
Traders have just posted PayPal for short under 57.80 because it did finally move up. And when you have a big gap down, you always want to see them moving first in the direction of closing the gap, which is what happened to PayPal. And then you want to see them fail. So my plan is to short it under 57. Actually, I'm going to change it now. It could be 57.90. I'm not sure. Let's make it 57.85.
Okay, Meta. I'm going to post Meta to the long side. This is a stock that we can wait on here. Meta long, and this is over yesterday's close, 469.60.
I'm still long small size in Disney. I won't mind buying again. I think it's just a noise. It's not likely to come down much. Won't mind adding at some point, but I'm definitely not about to close my open small size trade right now after taking a partial. Baba still kind of going sideways, not doing much. Small red territory. Watching PayPal closely to see if it fails. Could be 57.90, my new entry. There's a lot of options today in PayPal. One of them could be to the long side. If I'm going to fail going short, I'm going to consider going long, about to go short soon, under 90, because it's a stock that people like to buy on dips. But again, what we're seeing here is a potential gap and go, and I wouldn't let this trade slip away. It comes down. On the other hand, it moves close to the highs, like 58.50, we could go long. Right now, I'm waiting. Oh, I just missed this move in Disney. Should have added. I was watching PayPal here. Go to short PayPal, into 57.90. It's close. Still holding. Baba still looking good. I'm adding very, very small size to Disney here. Added, should have added before. I'm short PayPal, it triggered. The S&P is at the highs. We're slowly moving up. Not much.
Okay, just those of you that are in the Microsoft trade, holy smokes on Microsoft. This is where I'm coming out here, 414.80, 414.80. Now, just taking about 75 cents off of this trade.
Baba short. Just added to my Baba short because I think it's going to see a new low soon under 71.60. Could add under the lows. I already added. I'm not going to add again. Just move to a new low. PayPal just made a nice spike down. Now let's see if it's going to continue. Added small size to Disney, and it looks like it's maybe moving over the highs really soon. There we go, Disney over the highs. Barak did move under the lows. Now the question is what paper is going to do. Paper is going to fail moving down. As I mentioned earlier, it could be a long, nice spike down in BABA.
Microsoft continuing, looking great. 2 trades, 2 winners now on Microsoft and ARM, ARM. Out all shares ARM now. 200 shares left on Microsoft. Okay.
Tesla under the lows. Interesting. You should be watching Tesla. Meta also weak. Nvidia is strong. The market did move up, but not that much. Let's move in BABA at some point here. I would like to take my partial. I was risking like 50 cents. So I would like to see it somewhere near 71.20 and under. BABA is approaching my target and another 5-6 cents there. Wow, look at the arm, Scott.
What's that, Meir?
ARM, ARM.
Yeah. Blast off. And that's just what happens to me, traders, when I take it all off and Meir's here. And then Meir says, why did you take it all off the table? As the stock explodes to the upside.
You know, when you sell, I should buy.
2 points with it. Yeah, exactly. I always have to say to myself, Meir, you know, if I could come into this market every day and take 1 point away from the market every single day, I'd have no worries at all. So if I take 2 points out of ARM, I feel very happy until I see it go up 8 points, and then I start to cry.
Okay, BABA ate my target. I'm trying to get a little bit more if I can. Come on, BABA. Come on, BABA. Let's get closer to 71. Yeah, good. Moves over 71.25. I'll take a partial. Good, BABA. Good girl. Let's break 71. Be nice. Let's go. Let's go. Over 71.10, I'll take a partial. Now let's break down. Be nice. Good. But nice. Bouncing a little bit. Come on, Baba, you can do it. Keep going. Let's get back under 71. Taking a partial. Oh, I don't know why I did it. I took a partial. Maybe. I don't know. I had the feeling it's the right place. Market's giving up traders. The market just moved under the lows. PayPal responded to that, looking good. My added quantity in Disney is not doing that great. Baba keeps going. Wow, Baba. Some point here I would like to cover some more because it's a bit extended to the downside. Now the lows in PayPal is 57. I wonder if I should try and let it move under the lows. The market just came down nicely under the lows with some kind of a momentum. Also, if you take a look at the Nasdaq, you can see that clearly came down nicely. Question is, are we going to get some continuation here? It's very early, it's just 12 minutes into the trading session, so everything can change. Baba still going.
Okay, traders, I'm taking all shares off on Microsoft MSFT. I am out of all shares Microsoft MSFT. Okay. 2 winning trades, and I told you in the beginning of the day this morning that I was going to wait and be patient. And here I am 13 minutes into the day with 2 trades, 2 profitable trades. So don't know what to say other than they look great, took the trades, took the opportunity, and made the money. So got to be able to push the button.
Yeah, Tesla keeps going. Nvidia gave up. AMD gave up. Lots of stocks are coming down now. Baba doesn't stop.
No, not much. PayPal, possible short here. Disney on the pullback to go long. I'm watching that.
I'm going to give Disney some space. I imagine it's only coming down right now because the market spiked down, but it's not a big spike down. It's nothing. We're down 0.05, so it really doesn't mean much. And I think Disney is likely to recover. I'm about to cover some more Baba. It made a nice downside move, and I think it's way too extended to the downside. So if it's going to move over 75, I'm going to cover some more. Covered. Coin is looking good for a long. I'm on PayPal. Let's go party. My only trade left without a partial is PayPal. But it is trending lower. It looks nice for continuation. Huge volume, 12 million shares, down more than 9%.
Now, I wouldn't talk about Tesla until we get up to that yesterday's close here, the 187.60 area.
Wow, Scott. The stock is up 40% today. Another 20-something cents for PayPal to break down under the lows.
Okay, 108 Disney. Disney 108 traders may not have time to post it here. Disney long 108.
Okay, PayPal is approaching the lows. Buyers are 10 cents, 8 cents, 6 cents over the lows, 2 cents over the lows, 57. Let's see you breaking down. It's a whole number. We may have some problem there. watch the number of buyers at 57, but I think it's coming down with a nice momentum as it did, and it did move under 57. I am getting ready for a partial in PayPal. Just trying to get a little bit more here. Just broke down under the lows. Market didn't quite continue moving down. We're kind of holding. Nice reversal in Disney. Come on, PayPal. May take my partial somewhere around here if it fails to move lower. But I think it's likely to. Oh, correct. Okay, taking now my partial in PayPal. Look. I'll be right.
$108 entry, Disney 109 target. Disney, Tesla too much in one candle here. If it pulls back a little bit, we'll take it, but I'm not coming in right here at that 187.60. Microsoft on the pullback, maybe a long 415. Look at ARM now, 111. Wow, ARM. Great call this morning. Thank you again for the ARM call. Wow, Tesla. Okay, Disney targets 109. 109 Disney target. $1, 1 point away.
Okay, sorry, I'm back. My added quantity right now in Disney is doing okay. It's back to the middle of the range. Market's not doing much. PayPal is holding near the lows. I still have some small size left. Baba's doing okay, trending lower. Small size left there too. And I'm just waiting now for my added quantity in Disney. to get back to green territory. Moving to 5-minute candles here. Missed anything, Scott?
No, I mean, I'm in the Disney trade long there off the 108 now, approaching 109. So it could be a really nice trade here on this move back up. And hopefully we take out the top and move higher.
Coin over the highs. Nice. What happened to Tesla?
Yeah. One candle wonder, right? Right off the bottom.
Is that a shorting opportunity?
Mm-hmm.
Oh, no. I better not mess around with it. I don't know. I'd rather not. Nice recovery in Disney. Nasdaq is slowly approaching the highs. I can't say the same for the S&P. We're still holding in the middle of the range, but the overall trend is up, clearly, if you watch the daily. Therefore, this small movement that we've seen earlier that pushed the S&P slightly under the lows could mean just nothing. It's very possibly means nothing. So, small range, moved under the lows. It's not necessarily a trend. It did help my Baba trade and it did help my PayPal trade. At some point, it almost took me out of my Disney trade. But since I did realize it's just very probably just noise, I kept holding to Disney, which so far seems like a good idea.
Okay, Disney looking good. About 40 cents to go.
Riot looks nice for a long. Coin, wow. It's interesting to see that Apple's still trending lower. Netflix is weak as well. Google is weak. Kind of interesting to see that a lot of stocks are very weak. In fact, that's what really holds the market in the middle of the range. And Apple's coming down, Nvidia's trending lower, Microsoft getting close to the lows, Apple trending lower, Netflix now hitting a new low, Google accelerating lower. The fact is, when something like that happens, I don't see how the market can hold up, but it is.
Come on, Disney, still in this trade. 109 target. Wow, ARM now 112. I would do Microsoft again. Yeah, if it comes back up here, the 414.05 area, I'm going to post this and take the trade here if we get back. Microsoft. long 414.05, and that is yesterday's close. $0.15 to go. 109 target, Disney. $0.15 to go.
S&P still stuck. I'm going to short very small size in Tesla under 187.80. I think less than $1 stop loss. It's going to be a very small size, very fun size, under 187.80 in Tesla. It's getting there. Posted. Well, Nasdaq is over the highs. May not be the best timing for shorting Tesla. But really, again, the market, the S&P is in the middle of the range. Nasdaq did touch over the highs, but it's up 0.06%. So it's really nothing. I'm still interested in Tesla short, but it's going to be like a quarter size of what I usually take. It moves under 187.70. Short Tesla now. Disney still looking good.
Wow, ARM. Watching Microsoft here and Disney now approaching 2 cents to go on Disney. Watch the out here, 109. Watch the bid. Coming up to 109, that's where we're going to come out. I'm going to come out right here, 108.95. Couple more pennies. Couple more pennies here. Watch it, Disney.
Nasdaq still holding to the highs. If you watch the Nasdaq today and yesterday, you can see that we're touching an area with a lot of resistance. It's yesterday's highs, very close to yesterday's highs. And if you take a good look at the way the Nasdaq behaved yesterday, you can see that there's really a lot of resistance in this area. We do have a small, maybe just a really small help from the S&P, which is slowly getting closer to the highs. But again, the overall range is ridiculous. Right now, the S&P is at 0, exactly where we started. The Nasdaq is up 0.11.
Okay, traders, I'm going to take some off here at 85, 108, 85, 108, 81. I'm out half of the Disney trade here. I'm not going to wait for it to hit that 109. If it does, so be it. We still have half of the trade on. I want to pay myself first. Go up 3 for 3 this morning. 3 perfect trades, 3 winning trades, 3 green trades. And we're on our way for a Thursday here. Good morning so far.
Tesla still searching for direction. Disney is definitely trying to move up. Paper still holding near the lows. Microsoft touching a new low as we speak. So did Apple. Meta seems to be losing it. Google is trending lower, so is Netflix. My stop in Tesla is going to be over 188.70. Yeah, ARM just spiked up like crazy. Oh, out of Tesla. I've got my first loser today. Not much, but small loser, but still is a loser.
Microsoft, no trade.
Scott, can you remind me what was the price you sold ARM?
No, I don't want to talk about it. Meir, I got into ARM at 100 and I sold at 102.80. And now it's at 123, 126.
Oh, goodness. Not 20 points?
Yeah. I was just 20 points
You know, the fact is, who can... I mean, you can't really... It sounds like impossible to imagine something like that.
Yeah, but at the same time, you always go through my mind. It's like, why don't I just keep 200 shares on there, 300 shares on there? Why not, right? I mean,
50 shares.
I mean, look
Scott,
at
50.
Look at the 5-minute chart. It's just all green candles. Why would you sell?
50 shares, it's $1,000 now.
Yep. Amazing. Just amazing. Yeah, absolutely, Seth. I get it. I get it. Well, I mean, just because you're a great trader, doesn't mean that you don't go through the same stuff. And that's what's so special about the room. We share the good, the bad, and the ugly, and I think just looking at ARM, it makes you want to cry. But at the same time, to me, it's another green day, right? I'll talk about ARM tonight with my buddies or whatever like that. The one that got away, I understand it. But again, a green day buys the drinks. When you have a red day, it's kind of tough. So even though you missed out on probably 25 points or 20, I can't even stand it.
PayPal is crashing. PayPal's looking for
the easiest day out of the 4 this week. We've had really tough action on the market this week, so you didn't miss much by being gone.
Yeah. This is a revenge trade for me in PayPal today, Scott.
Yeah.
I think like 2 years ago, we closed an account in PayPal, and I can say that one of the reasons were they were cheating. Like you have money in dollars and and they only let you take it out. No, you have money in euros and they only let you take it out in dollars. They don't let you take it out in euros. And then, for whatever reason, I know the reason, of course, because then you need to change between euros to dollars, and they take like 3.5% on that. And so they were really dishonest throughout the whole years that we were working with them. And I think like 2 years ago, we closed down the account, and they didn't want to give us the money back for something like 8 months. It was something like $500,000, Scott. $500,000. They didn't want to give the money.
We're talking about PayPal?
Yeah. They just didn't want to give the money. Wow. They were waiting to see that no customers have any claims and so on, and they wanted to wait. I think it was 6 or 8 months, something like that. And then you just have to beg them and ask them, and at some point they paid, but it took something like, I think, 8 months or something to get the rest of the money out. And it's your money, and they just don't give it to you.
Man, unbelievable. So you're not a big PayPal fan?
So I just had my revenge trade in PayPal. Not much, not my best trade today, but still is a revenge trade.
That's going to be interesting. When you look at stocks like Nvidia now, that was let me pull it up here because I didn't have it up today. Nvidia, that I'm sure is almost $700. Yeah, $700. I mean, Michael Revy and I were talking that just a few months ago the stock was $400, and now with AI is affecting Nvidia, Microsoft, Google, Apple, and Meta. And these stocks here, you know, on pullbacks, you're going to have investors come into these stocks here and try to pick these things up and ride them for the year. And this AI thing can be big. The more I read, the more that we know that we're in the infancy stages. And I think one comment that hit home was this headset that Apple has, the Vision Pro that came out. One of the people said that this is going to be the worst headset in the scheme of headsets, even though it's the best headset now on the market. when we look back in 2 to 5 years, we're going to think like remember when the first iPhone came out. Now you look at the first iPhone, 10 years, 13 years later, and you're like, oh my God, it's like a brick, it's like a dinosaur. And that's what they're going to be looking at these Vision Pros like.
Yeah, but maybe it'll starting something new here. I would actually love to try it on.
My brother just went yesterday or Monday, and you can go to the Apple store, Meir, like this weekend, and you can schedule an appointment now and head in there, and then they'll walk you through a whole demo for free.
It's a demo? Okay, but they don't sell it to you right now.
No, you can buy it. You can buy it now. It's for sale.
Oh, really? I thought they had a limited number of units they were selling or something like that.
Maybe limited. I don't know, but I know it is for sale.
Okay.
But this Apple headset pair with it. Now, pretty soon we're going to see Meir here. Meir will be sitting out at the beach with his headset on, pointing and trading on the beach with the water in the background.
Exactly. That's the idea, trading out of that.
Yeah,
that's what I want to try. I want to see if that's possible. But I think it only has its own apps right now. It's not that, or maybe you can, I don't know. Can you just watch a screen like as if it was a screen and do things? I don't know.
I know you can get on the internet. I know you can go to YouTube. You can go to websites and things like that. So, yeah. Well, something for you to pursue.
You know what? My wife has a birthday in a few days. I'll get her one. Obviously, she won't use them, then I'll have them.
Yes, that's a perfect gift. Here you go, honey. Look at this. Happy birthday to you. And then 2 days later, they'll be in your office and you'll be using them full time. The gift that keeps giving.
Yeah, you have a web browser, but can you actually click buttons? Doesn't work in Europe? Really? How come? Strange. So it seems like it's only in the States now, Scott. That's what the guys in YouTube are saying.
Interesting. Yep.
Yeah. I was kind of considering maybe I should buy.
I'll send you one.
Yeah, but if there's nothing I can do with it, it may be restricted outside the US.
Yeah.
That's gonna be real nice if I could trade with that. It's like living in the world of stocks, Scott. You just put that on and trade while walking the street. Come on, Disney. Can you please spike up? My target is close to the highs or over the highs. Yeah, Ben, I know. I used to trade. I think the maximum number of screens I used to have was how many? 6 or 7. I think I had 7 at some point. Something like that. I no longer do. My best setup right now is 3 screens. Of course, they are, you know, bigger and much bigger actually, but not that big. I mean, they don't cover the space that 7 screens used to cover. But it's higher resolution and it's bigger. And I did come to the conclusion that the best setup is really 3 screens, one by the other, same level, so you don't have to pick up your head and look at it, so throughout the years, I decided I no longer need so many screens. Ruben,
Disney got close
we're working on the new packages, but we should have had them months ago. So it's still on production. But we're doing something really interesting. That's why it takes a little bit more time.
Traders, those of you that are in the Microsoft trade, we had this one candle that got us into the trade here at the 414.05, and target's going to be 414.50. We're going to add at the 414.50 in case this direction on the market is all that it's made out to be. The SPY right now and the rest of the market are higher, and again, we as of right now, markets are a little bit red. Dow's down about 9.5 points. S&P down just 0.20. Nasdaq's up 32 points. So here we go. Hopefully we start to take off now to the upside.
It's a combination of prop and education and something else. But it's kind of a new concept based on other concepts, but well, I can't get into too many details. Here comes Disney.
Finally, now Disney over 109. I'll let another 100 shares go here on Disney, 109.27, and I'm out. 30. Yep, out. Disney, 100 shares to go. Good pickup here on the Disney trade at the 108 area.
I am getting ready to sell some Disney for my edit quantity. Just touched my target, which is close to the highs. But I'm kind of giving it some time here to see whether it can move over the highs. S&P is not going anywhere. We are at 0. Nasdaq, however, is up 0.16. Highs in Disney is 109.50. If it's gonna bounce here, then I'll have to sell. But looks like it's gonna challenge the highs real soon. Look at the time and sale. You can see the volume growing. If it moves under 25, I'll take a partial. Under 109.25. I don't want to see a pullback here. S&P is kind of holding near the highs but going nowhere. Nasdaq just touched the highs. Disney holding near the highs. A lot of resistances out there. So I may have to take a partial. I don't want to see it under 109.25. took partial in Disney. And that's actually it. Apple's doing well. Baba still in green. Disney riding well. And I'm done for the day. Here are my results, traders. One small loser in Tesla. A winner in PayPal. A winner in Disney. And a winner in Baba. These all worked well. And I'm up $4,700 actually with my open trade, just over $5,000, which is not bad for less than an hour. I'm happy, especially after being away for a week or so. It's always a concern, Scott. When I'm on a holiday and I get back, I'm always kind of worried whether I'm going to overtrade or something like that, because it does happen a lot.
Oh, you did a great job today, though. Very good trading.
Michael asked me if I can leave if I can leave you guys with some life advice before I depart.
Don't buy too many boats.
Actually, I heard something good the other day, trying to remember what it was. It was really good, but I can't remember. What was it about? I don't know. Okay, Disney over the highs.
Yep. Nice breakout now on Disney.
Good job, DVJ. Guys, thank you very much. Don't have anything clever to say right now, Michael. Some other time. Appreciate the fact that you traded with us today. It was fun. I really enjoyed. And don't forget to hit that like button if you're watching us in YouTube. And I'm here tomorrow. I'll see you tomorrow. Bye, everyone.
Meir, we'll see you tomorrow on a Friday. Yeah. Enjoy your
Thank
evening.
you.
Talk to you then. Good trading,
Thanks.
partner.
Bye.
Okay, traders, as we transition, we'll take Meir's desktop, stop his, and we'll put mine up here and transition into the mid-morning. Now, nice trading by Meir this morning, coming back off of being on vacation for a little bit. Always, like Meir says, I'm the same way. You don't want to overtrade. You want to make sure that you blow the rust off of your trading, and we've certainly done that today. Good start to the day. Now with myself, 4 winning trades this morning, and we'll continue on as we get into the mid-morning trades here. Now, remember, 11:30, we've got Michael coming in for lunch. I'll be here to the closing bell today. A really good day of trading so far. We'll see how it turns out. Yeah, I'm going to be out of all shares Disney right now. I'm just taking it off. I'm going to be flat right now. And just, I don't want it to, if it goes under 109, then that's fine. But now I'm looking for the next trade here. I'm going to come out of all shares Microsoft now, and I'm flat right now. The SPY, as we know it, chopping around. Kind of looks like what we had yesterday in the midday or in the morning session as well. Choppy, and we continued that throughout the day. So let's look for trending stocks like ARM that could give us a trade. I was just thinking about it over 120, and obviously it's gone now. SPY looking to come back now. SPY faked us out here now. Wow, NVIDIA. Meta's not doing much, not doing enough. I mean, Tesla looking good now to break out of the high. I'll post at 189.25, small share size here. Okay, there we go. Come on, Tesla, give us the opportunity now. Yeah, I mean, the SPY, just like yesterday, just kept giving us these fake breakout signals and all. Watch Tesla here. SPY now red.
Morning, Scott. Good morning, traders.
Hey, good morning,
How's it
Craig.
going?
How are you?
Great, thanks. How are you? Sounds
Doing
like a
great.
good
Doing
morning.
very well.
ARM looks like it was the stock of the morning for sure. Lots of traders had eyes on it. Yeah, this is where we are. Markets right now, starting with crypto as well. Bitcoin holding well over that 45K. Talking with a few traders in PM about coin as well. But yeah, Bitcoin had that 45.2K rejection, came back to 45 and then rocketed through that, now making its way up towards 45.5. And as we've been talking about for quite some time, I do think that 46K is very much in sight, can be taken out. The rest is up for question before we get a small pullback. Maybe we'll retest that previous 44K breakout, see how that goes, and then obviously Ethereum continuing on from 2400. And the markets right now on the equities side, we're seeing SPY and Triple Q just play a bit of a chop game. If we're back to what we saw the past 3 weeks, essentially since the start of January, where we have that initial range for the first hour and a half to 2 hours of trading, and then we get that break from the range and continuation. Maybe we might get that. Maybe you guys might get the 2024 lunchtime with Michael, where break the range and continue very nice trades, especially on high beta stocks like Apple, Nvidia, Meta, name it, right? So that's definitely probably going to be something to watch going into the lunchtime as well. And the Qs take out yesterday's high. If they do that, obviously that's going to be new all-time highs. And will we start to get that continuation, or will we get that continuation like we did yesterday? We saw a very nice follow through, and that's going into the afternoon as well with that bond auction. So lots of things to keep eyes on. Bitcoin as well being fueled by a weaker dollar. Seeing Scott mentioned gold this morning being down, has recovered somewhat. We're seeing lots of things recover as well. The only question I was asking is, are they selling Nvidia to get into ARM? Up almost 50% on the day. It's crazy. Post earnings, just IPO'd last year, up over 50%, I should say. I didn't even check that. I stopped watching it, as I told Kieran as well, because you definitely get that FOMO, and something is up 50% on the day, something this liquid and that many shares traded, 55 million shares traded, or changing hands, I should say. So actually look up the float on that. How many of the how much float has been traded today? Some fundamental data you can keep an eye on. Nice, Ian. Good to hear. Okay, green are always welcome. Have a good afternoon. See you tomorrow.
Ian, take care of yourself. Yeah, enjoy the rest of the day. We'll see you in the morning.
Let's see, ARM, 5 million shares traded. Shares float, okay. 1 billion shares. So basically, not much of that. And institutional ownership, let's see, only owns 7%. Rarely anyone is short. This is all organic buying. It's only 1% of the float that's short. Yeah, Kieran, I think, you know, one of the things that you'll probably appreciate as well, when something moves as much as this, I mean, it's going to have action for maybe into next week. Tomorrow, you can keep it on your list tomorrow. Does it get follow through, or does it start to come back? Might need to leave it alone for today, and then on Monday as well, Friday, after everyone hears about, oh, did you get into ARM? They have their weekend conversation. Scott goes on the golf course and tells all his friends about ARM. They get in and say, oh, well, must be a good buy. Maybe they get in for some follow through. So, who's setting up that they want to break out? Scott, is that an aura ring that you had?
What's that?
Yeah, I saw a ring on your hand. I was wondering if it was the aura ring, sleep tracker ring.
It's not an aura ring. No, it's I forget. Just a silicone band, a rubber band.
Oh, okay.
I forget who makes it,
It looks
but it's got little air Air pockets. I just noticed it's got a little rip in it. That's not good. I just use it because, you know, I've got my wedding band, but I enjoy this because of the fit and being in Florida where we're swimming, boating, hot weather and stuff like that. It's just it's just easier. So
yeah, that sounds good and flexible.
now listen, my ball and chain, that's made of iron, so that's heavy to pull around all day. Just kidding.
I get you.
Yep.
Yeah. Sure. Well, I was
When the
wondering
door is open,
I
when
was
the door is
thinking
open,
about getting.
Craig, you always got to take advantage of a good comment, you know. Right.
I know, right? When the door's open, when the sound can go through the hallways, right?
Yes, sir.
Yeah, I was looking at the Oura Ring because you know, it's the newest thing in sleep tech. Everyone's talking about sleep now, getting the right amount of sleep and sleep tracking and all of that. So I
Right.
was thinking about getting it, and not right before I pulled the trigger, I saw Samsung announced the Smart Ring with the S24. So I'm waiting until summer to see if they release it then, before I get into it.
Who was that? Google? That was going to
Samsung.
release something? Oh, Samsung.
Samsung.
Are you a
Nice
Android
tool.
guy?
Yep. Android.
Do you have the new Samsung 24?
No, I have the 22. So I'm 2 years behind now. I typically
That
change every
24
3
looks
years.
great. It really does.
Yeah. Yeah, it does. But to my first venture into Android versus iPhone was an iPhone. I had the first iPhone. That was when everyone was using Blackberries. Not sure how old our client base is, but they should know what Blackberries are, right?
Yeah, right.
Yeah. So I switched from BlackBerry to an iPhone, and
I was telling somebody the other day, I loved my BlackBerry. I really did back in the day.
it was ahead of its time, I think. Pretty sorry to see. There we go. Q's over the highs, and yesterday's high of day. See if we get that,
Just touching that Tesla trade now. We are long the trade, 189.25.
Take care, Tony. Enjoy. Hope you had a good one.
Yep, Tony, take care. Enjoy work today. Talk to you tomorrow.
As Scott said, traders with the interviews, it's always great to see, put a voice to the name here, put a face to the name, as you know, such a tight-knit community, and then hearing traders' stories. We learn from everyone. I saw Ian, you know, complimenting DVG earlier, and it's true. You know, we're here and there's no trader that you can't learn from or at least help you reinforce certain things, even if it means just answering a question. So it's always good to share your story, journey, and you never know who you might be helping out, and vice versa, pay it forward. Question is now, it's all about the follow through. Will the cues follow through?
Okay, Tesla, come on. I'm looking at 190 on Tesla. If we can get there, I'll take it off. Well, Ralph Lauren did not disappoint today. Meta looking good. Meta, I would take Meta over yesterday's close if we get there.
ARM setting up for another new high. Let's see if it pushes past that 126. Crazy that it ended yesterday. 70 something. Let's see. Seth Boog. Yeah, Google is definitely that higher day resistance there, and with the cues breaking out here, I think what you want to see now is bring up the chart of a triple Q and see that we've pushed past, and the breakout point we want to retest it. So look at that 432.80 to 433. Or 432.90, you want to see that level retested now. Right now we're just getting that initial orders coming in. Test that and you can see that it's protected. Start to build a reversal again, and I think this breakout will continue. And as you know, it's just a blue sky breakout, so you have no idea where they're going to sell or where they're going to stop buying. You just have to be patient with it as well. Continue. It's definitely a level to watch, especially going into the afternoon. They're leading the way, aren't they? Take a look at SPY as well. See, it hasn't broken out yet, but it still red. But let's see. Is it ARM that's pulling the Qs higher? Let's see. given ARM's youth when it in terms of it being on the market, but it is does have a huge market cap. Yeah, DVG by the dip are definitely here. Here to stay. We've seen it since January. Nothing new. Nothing is scaring this crowd. Fed is definitely playing it safe. We all expect that. And you know, you could somewhat say that the earnings season was teed up to be successful, giving everyone lowered their guidance after 2020. During the beginning of 2023, everyone was lowering their expectations, their guidance. They're saying inflation is high, still recovering from COVID, blah blah blah. Now, you know, companies are coming in, announcing huge investments, you know, huge profit beats, and that's because the bar was low. Now this is where we're going, and in an era where companies are willing to invest, and we're anticipating that rates are going to come down, that's doubly good, because it means that they're willing to, if they're willing to invest at these levels, what are they going to be doing when rates are 1% cheaper at the end of the year? If we get to that, I should say. So let's see what everyone's doing. As I said, Disney jumping in on Epic Games is a big move for them, teaming up, you know, the whole Marvel and comics and stuff. They can easily integrate that into the games now and be a cash cow. Seth, yeah. You know, this it's a funny thing, cars. It's always they're always great until you get them. You want a specific car, so happy that the happiness peaks 1 week into buying it, for me at least, getting it. After that, it's just something I hop into. But maybe when I buy a supercar, then that will change. But most people tell me that own supercars tell me that they're not that exciting to own. What do I know about cash cows? I know a little about cash cows, Michael, primarily because it's just a term, right? Yeah, exactly, Seth. The happiness will peak as soon as you get it, and then when the payment hits, yeah. Ruby's trying. This market is trying really. If you look at SPY, obviously the Qs are leading the way at the highs, continuing. Excuse me.
Come on, Tesla, blast off for us. Need one good one here to finish it up. I had a nice bump up there to the 189.73. I'm looking for more on the stock towards 190.
Good morning, Scott, Craig, everyone. May I get a sound test?
Michael, you sound a little muted. See if I can help you out here. I'll boost. Try it again.
Yeah, can I get a sound test?
Yep, much better. How are you, my friend?
Well, pretty good. I mean, thinking about the difference between buying ARM today and buying any other stock. How is it possible?
Right.
50%, 60% up? It's not like somebody did not trust ARM to follow up on NVIDIA and the rest of the gang, and obviously the earnings or the projected earnings, wow. I mean, betting on the semiconductor sector is obviously the right bet right now in the markets. I don't want to say all of the semiconductor sectors need an amazing move, but most of them followed NVIDIA, AMD, MSCI. I mean, so many. I mean, what is it? TSM also at new highs today, up another 6%. The semiconductor at all-time highs sector. I mean, wow. And PayPal, the opposite. What's going on with PayPal? It looked like it's recovering over the last couple of weeks. Guess not. Guys, let's watch Disney. It's amazingly strong, up now at the highs of the day. Pullback to the VWAP obviously will be viable. Plenty of stocks that reported earnings. Some of them rate movers like ARM, CFLT, OSCR. Let's watch also CFLT over 31.8. Unless it breaks down now. It can break down, but it looks good over 31.8. CFLT. And also watching OSCR, another of the reported earnings that's so far moving sideways, but at one point I hope it will turn around, looking for that 17 long OSCR. We have Bitcoin stocks very strong today, Disney very strong, Riot and Mara, of course, some Chinese stocks, anything other than Baba, I'm guessing. The range today very narrow, and we are exactly in the middle of the range. Now this CFLT is moving lower. Not good.
Definitely. The only thing I'm in right now is Tesla, and I'm trying to get out of this before we break for lunch today.
Qs are up 0.25. SPY. Where's the SPY? That ballpark pretty much down 0.05, so a bit weaker. But you know, there's no match to the semiconductors. Guys, if you see anything interesting, CFLT moved lower, so long trade there. This near the highs, long trade there. Tesla doing very well. So in days where it starts very, very strong, it turns weak. But today it started weak, turns strong. Now at the highs of the day, looks good. Maybe finally it's going to break that 190, and well, it still has plenty of room to go, if it's going to go eventually. CFLT actually taking a dive or beating right now. Hey guys, that 3180 totally out of sync right now, or at least in the near, I would say 20 minutes. best performing Nasdaq stocks today: Coinbase, TSM, Square. Even the energy sector is up. There's nothing to do though with the Nasdaq. Meta is flat.
Okay, traders, I'm going to take off the Tesla trade here. Just going to come in here at that one. Well, let's wait. We'll watch the 179. I'm sorry, 189.76 here. See if we take off. Should get the breakout here, and then I'm going to sell into the strength of the move. There we go. Big time move. Look at that. Just waited for it, and boom, we got it here now. Coming out here, 190 on the Tesla trade, 190.02. I am out 3/4 of the trade. Tesla, a 5th winning trade for this morning session here. What a great move here. Was not looking for that. Great move, though. Awesome. Okay, that works out well. Thank you. Awesome, awesome,
Actually,
awesome.
don't expect this breakup
What's
of the
that?
highs with zero market support, and Tesla is still finding buyers, pretty much like Disney. No stop in both stocks. Disney at the highs, Tesla at the highs. No market support whatsoever.
That's great. Okay, out all shares now. Tesla into this run. Beautiful move now on Tesla. I'm thankful for this run on TSLA. All right, perfect, Michael. Perfect. Traders, congratulations. Those who took the Tesla trade, we got out of it. Remember, we do have 2 IPOs today scheduled, KYTX, Michael, and PMNT.
Yeah, I wrote them down. Let's see if they show up later. No stop in Tesla. Now I'm going over 190.50, and I mean, on a day like today to be up 1.5%, that's a very good accomplishment. Maybe finally the buyers are coming in after a rough patch for the stock. Now sliding lower towards the lows of the day. Again, the range today is so narrow we can move from the highs to the lows in, I don't know, a bar, 1 bar. That's roughly $1.90, Wow, rough $1 range all day. Wow, crazy.
Okay, traders, out all shares. Tesla, awesome move. Awesome, awesome, awesome move. So excited.
Now anybody that did not buy Tesla is obviously missing that $1.50 breakout with no market support. That's uncalled for. Again, maybe there's some news in the background. So we saw some minor pickup in volume on this move over 190.
Okay, Michael, I got to leave you just a little bit early today. I will be back, traders, this afternoon, taking you through the 4 o'clock bell today. Michael will come in and take over right now and take you through the lunch hour. A great, great, great trading session this morning. So hopefully you joined us here, and I'm looking forward to trading with everybody this afternoon. Michael, I'll keep you abreast of what's going on. Maybe just a tad bit late coming back today, but not a big deal. And I will see everybody later today. Awesome, awesome morning. Thank you so much, and thank you to everybody on YouTube today. A great, great day so far. All right, everybody be good, enjoy, and I'll talk to you a little bit later. Thank you, Michael.
Thanks, Scott. Enjoy your lunch session.
Thanks, Mike.
Sometimes stocks don't need the market to deliver great moves. This is Disney now out of control, and Tesla. As I need to refresh and come back. 1 minute. I hope nobody's trying to do any stupid thing like shorting Disney or Tesla today. Take this one and bring Disney. Watching for a pullback in Disney and okay, I'm looking for a trade in Nvidia. I just don't see an entry right now other than, I don't know, maybe 7. I don't see a clear entry, so I'm gonna wait with Nvidia. Wow, there is no end in Disney and no end in PayPal. Guys, did you see any new trades? Just post them. CFLT pulled back like almost 80 cents, moved up. Now it's down. It's kind of broke the clear uptrend, then reversed sharply, but I wasn't watching it on its way up. Anyway, I will have to wait there for a better opportunity. We can go based on the market. We can trade both sides of the market. We are exactly in the middle of this $1 range, which is ridiculous. Let me check it again. 498 plus 497 plus. Yeah, it's a dollar. Ridiculous. Meta. Where is Meta on my watch list? How to pinpoint any strength in Meta? It's flat on the day after starting week. It's indeed trending higher, but yeah, trending higher. I just don't see the the strength in the stock. It's up 0.08, and the market is not supporting it at this point. We are actually at the lows of the day. The level of support in the SPY is exactly here at 497.30. Financials are weak, but they are being offset by strength in energy. China is weak. When I say China, I mean mainly Alibaba is weak after a horrible open. And yesterday it was also very weak on earnings, so continuation of yesterday's price action. Guys, if you see, I don't know what to look for. I mean, I was looking for longs until 5 minutes ago. Now I have to maybe change the strategy and look for shorts. I don't have any short ideas right now. Basically looking for longs all day, all week, all month. I would suggest not buying right now. We are potentially breaking under the lows, but if the market is going to do what it's doing lately, meaning touching the lows and reversing, that won't be a problem. Guys, do you see any momentum stock that we can potentially look at? I'm watching Disney, Nvidia, Apple. Let's bring in Tesla actually. So we have Tesla, which is or should be we should be looking for pullback. Nvidia, it's always on the alert. Apple, actually Apple is relatively weak today, not a great deal there. And insiders sold 40 million shares of Meta. Good for him. Who's that insider? I think there's only one. Guys, did you see the OSCR break over 17? I was watching it, but looking at so many other stocks like now Disney and Apple and Tesla and PayPal and so many others. So I missed that 17 reversal long. If it pulls back, that's a good trade. I mean, I know that most of us are not watching small caps. It's a small cap, but up 28% today, trending sideways and up. So it's most of the time those stocks are good movers. Let's take a look at AMD, NVIDIA, and TSM for potential longs. AMD. AMD is actually negative on the day, really? NVIDIA up 0.5%. It has potential 705 coming up. Clear support at 703. But it's not like it is a great setup. Here at 705. 706 looks better. Highs of the day 708. So I'm waiting for a better setup in NVIDIA. Amazon, I don't see anything. Let's take a look, guys, at one of the other great movers in SEM is TSM. Fresh new highs. We traded it, I traded it, I think, twice or three times already this week. Did not trade it today, and obviously that was a mistake. I don't see the clean entry point there. Needs a deep pullback on the daily and obviously on the intraday to trade it right now. We have Disney at the highs of the day, Tesla at the highs of the day. Those are the leading stocks that I'm following, but I just don't see new entry points other than breakouts, which are maybe great adding points, but not great for new entries. NVIDIA started with a nice move up, then a clear sell-off bar, and since then, where it touched 695, it's up $10, which is not a big deal for a $700 stock. If you remember Tesla from 2 years ago, before the split. kidding me? This CFLT is totally bonkers. Wow. We need to snap out of this impossible range so we get more stocks involved. We have 2 stocks involved now: Disney unstoppable and Tesla unstoppable. The rest of the market, I just don't see, anything special. Unbelievable. Fresh new lows for PayPal and now under 56 after trading over 58.50. So a 5% reversal intraday. That's a big one. Doesn't look like the leaders are pulling back. When I say leaders, Disney fresh new highs, Tesla traded over 190, 150 just 2 minutes ago. I would be cautious shorting semiconductors again. Semiconductors are the storm. I mean, at one point there will be a sell-off. Right now it looks like it's either obviously some short squeeze in the sector, or more good news, or more buyers joining in late, or what looks to be late. We'll see it in 3 months. We'll see where this SMH is going to be. There's the partial here in OSCR for those who took the trade, covering exactly the risk, which was 30 cents. And CFLT, insane move down. This is a real weirdo. Yeah, there is volatility, but in only very few stocks. If you look at the market, it has zero volatility. If you look at the upper 1% or 0.5% of each index, the gainers, losers, yeah, they are very volatile. Guys, we are going to get into the lunch session in about 15 minutes, and then we have an important bond auction at 1 p.m. So remember, the Thursday bond auction is very important. I mean, that's something that we didn't pay any attention in the past. Zero attention. I wish we could trade ARM, but the stock is so volatile. Obviously, the best day ever for the stock that was IPO'd, I think, at 70 or 60, like 6 months ago, maybe a year ago. It doubled in one day. Chips will fail after a couple of downgrades. I don't think they will do it, on their own. They keep moving up and down in this absolute zero range. Guys, I'm still waiting for a new trade. Looking at for Alibaba, it's not even moving anymore. Amazon, nothing. The only place where there is life to the upside is Disney. But who's going to buy it at 111? We need it to under 110 or 109.50, if possible. Okay, so the market is not doing anything for us. We'll need to be more aggressive. I can't even pick up a side for this market, being that we are basically not moving at all. let's watch the 190 break down in Tesla and maybe buy it. The VWAP is 188.80, so that's something that we could work with maybe if it's gonna pull back eventually. And again, all the market does is reaches at the lows, moves down a couple of cents, and immediately the algos are buying. Which one? PMNT. Let's take a look. PMNT. Ouch. That hurts, Davidi. A $4 zero volume stock. That's not our cup of tea. The other one is KYTX. Maybe that one will be. The only IPO that I remember lately is S. You cannot forget that one. Volume dropped to less than 350,000 shares. And the range is now 25 cents. Really? We need a pullback. That's definitely something that we need right now. That's not happening in Disney. KYTX should be better. Let's hope so. Okay. Getting some pullback or a minor pullback in Tesla, a minor pullback in OSCR back to the entry. So those who missed the OSCR, maybe if it pulls back under 17, we can buy it again. We're trading such a narrow range dead session. Really, really dead. Other than, again, very, very few stocks. Guys, if you see anything interesting or you think you see anything interesting, because I don't see anything, I just see this unbelievable chop. Searching the gainers losers list for strength or weakness. The moves in ARM are unbelievable. That stock moves $2 in a minute. Actually moves like Nvidia, maybe even better. Today, I mean. I gave up on trading PayPal. I'm not watching it anymore. It's not volatile enough to trade. We have at this point very few opportunities. When I say very few opportunities, I mean for the long side, meaning on the pullback in Tesla, maybe a pullback finally coming in Disney. Unless we snap out of this impossible range, I don't see us doing anything interesting. Looking at so many stocks that are absolutely dead. Yeah, Apple is a short-term, if you look at the intraday chart. If you look at the SPY, you cannot trust the SPY not to move higher and push Apple up. I won't be surprised. Let's put it this way, we can't be surprised for any move in this market, being that we can make it to the highs or back to the lows in one bar. The only place where there is a trade day again and again is Disney. from that 111. I'm still waiting for it to break down. Not happening. Okay, guys, let's be patient. You can buy Tesla right now at 191. The risk will be $1, or we wait for a better setup or cheaper entry. Why is this stock is? Guys, another stock that's worth watching today, DT. It's down on the day, but a good scalp play is available. It's a $50, $56 stock. Can't just can't figure out where is the entry. It's coming down to the V-up and then moved up and down and up. So it doesn't have a clear uptrend, but it is uptrending. Maybe finally the market will find its way down. Or up or anything, anything. Guys, if you see anything interesting, I'm still waiting for this CFLT to snap out of this, up down legs, and finally move higher. We have a trade at 3150 in CFLT 3150. The pattern is not that great. It's it's a mid-range pattern. 3150. Yeah, 3150. Making some tea is a good idea, and the timing for tea is perfect. The only trade that's left with a semi interesting pattern is Tesla over 191. Like I said, the problem is that the risk reward is negative. Highs 191.60, support 190, so it has a negative risk reward. Why is this market moving so lame? I mean, this is weird. We had terrible land sessions this week, but a $1 range all day. I don't think we had this phenomenon so far. So late in the day, and the range is $1. Well, looks like Nvidia is losing the VWAP now. That's actually a good thing for us. We don't need to buy Nvidia so extended over 705 or whatever. Let's watch maybe the pullback under 700 if possible. Yesterday it had an amazing trade. I think it's 705. I don't remember when it. What was the entry? It moved. I don't remember, but it was a great trade yesterday. 695. I can't remember anymore. The market seems like it's taking a breather today. Very disappointing. In terms of trading of opportunity, other than that, the morning session was obviously great. Okay, maybe there's more downside. AMD. Andy did not have a good week. This week was, if you look guys at AMD this week, Monday red, Tuesday red, Wednesday dodgy, today dodgy. Looks like there is some sell-off pressure in that stock from 180. Keep in mind, it's way better performer than Nvidia lately. Okay, Tesla. That's the only long that I see right now. At 191, risk is 60 cents. The target is 60 cents. So it has doesn't have even a positive risk reward. That's why no market support. So that's basically almost like a breakout trend. I did not buy the 191 in Tesla. If anybody got into this trade, 70 cents risk, I would say highs of the day to $1 target. The market totally stopped moving. Totally. I mean, really? Did you see, guys, the amazing VWAP? The power of the VWAP. I mean, it's not like the market is doing anything. Nvidia touched the VWAP, the algos immediately, like dog hounds, are buying it. The market is finally supporting Tesla. And longs, I think we moved over the VWAP by a couple of cents. Let's move over the highs of the day and bring some life into this market. And maybe some better trading opportunities. Looks like this leg up in Tesla will have more success right now with the SPY showing some green. Very tough this Tesla at 191. And now the market is kind of supporting it, and it's actually moving a bit lower. I mean, obviously there was a pickup in volume, but nothing like the move over 190. That was a bullet move. Still looking at CFLT, the entry again was again pullback from 31, almost $1, up $1, and you know, you cannot buy it so extended. Now it's back to 31. I was taking at one point at 31.50, then 31.60, ended up not buying it. We have a potential short in Apple under 118, sorry, 188. Let me check out the entry. 188.17. The VWAP is at 188.30. Let's call it 40, so 25 cents. Again, the market is not giving us any hint that it's moving lower, because this is what we need in order for Apple to, you know, take a drop here. huge mistake. Guys, if anybody is still in Tesla, I'm using, I'm not in the trade. I would use now 190.75, so only 25 cents of risk. I did not buy CFLT. If you look at the chart, Davidi, at CFLT, you'll see that the entry was amazing, amazingly easy to figure out. 31 over the VWAP and 31.60 risking 15 cents. In retrospect, easy to see. Real life, I guess not so much because I didn't take the trade. And now at 31, it looked very extended with unclear stop loss. Wow, this market is intent of not doing anything, really? That bad? Now Apple is over the wheel. Obviously, Apple will be a play at 188. Let's call it 20, risking no more than 25 to 30 cents. Again, only if the market turns lower. Right now, the ranges are, I don't want to say zero, but they are zero. Wow, what an embarrassment. Apple is now moving higher. So again, the choppiness continues. Nvidia lower again, back almost to the view up again. I mean, we have no anchor to work with this super choppy market. Not good for Tesla. Now Apple is moving up, Tesla is moving down. Can anybody figure out what the hell is going on here? Other than some money changing hands from one stock to another? See, that $1, not even the $1 stop loss would have helped in Tesla. Tesla, if it's, if it's a no-go, then it's a no-go. And I guess the market direction today has nothing to do with Tesla. Unbelievable. Apple is moving up. I nearly posted the short trade in Apple, hoping that the VWAP will block it and this cohesive market will will bring it down. It did the opposite. It brought down Tesla. So forget about shorting Apple, I guess. There is actually another opportunity now at 32.20 in CFLT using 32 as stop loss. Again, it's more like a scalp entry though. Looks very extended, but at least it has the tight stop loss at 20 cents. Like, Okay, guys, moving higher. Again, very slowly but surely. Highs of the day, 498.30. Let's take a look, guys, again at two stocks, ARM and TSM. Wow, ARM, those moves are brutal. Way tougher. I think it's way tougher than Nvidia to trade these days. Today, I mean. Highs of the day, 126. Next level of resistance, clearly 123. Level of support, I don't know, way lower. Guys, maybe there's a trade short in Alibaba. Let's take a look. Wow. Let's go with Baba. Very little risk. The trend is down. I mean, we can use either 15 cents or worst case scenario, the VWAP as the stop loss. And target will be 20 to 40 cents. I mean, the real target is obviously the lows of the day, but the lows of the day seem like a distant memory right now. Guys, remember half an hour to the bond auction, 1 p.m. Remember that, just in case some of us forget. no end to this ugly pullback in Tesla. So Tesla is either go or no go type of a trade. 2 hours ago it was a clear go, now a clear no go. Guys, if you see anything interesting, I'm looking now at some stocks that reported earnings, but not very easy to figure out what's going on here. There's one play where no doubt anybody that's still in other than ARM, of course. This Disney, unstoppable, and there was one split second pullback under 111. I don't know if it was tradable. I think our best next trade is still Tesla, this time over 190. Again, we cannot use the VWAP. That's my drawback on any trade right now, is that the VWAP is not usable. It's a down $1. Feels not really, taking these transaction trades with a lot of risk. Not a good deal, as much as I'm looking at Tesla right now. CFLT stop loss under 32. Well, Tesla is moving lower and lower, definitely losing all its momentum. Still up more than 1%, which is, of course, stronger than the market. The market is trading like it's, I don't know, Thanksgiving or 4th of July, or, you know, the algos are not playing the rules here, with any rules, I mean, other than Disney, which I think is also a big short squeeze. Guys, let's forget about Tesla at this point. I don't see a reason to get involved unless it touches the VWAP, and that in that case, that's definitely will be more interesting with the less risk. I will exit CFLT under 32. I didn't have a real good entry there. Took a very small position eventually at 32.20 after thinking not to trade it, then trading it, and hope nobody followed me on that one. Disney is insane, up 13%, but no pullback. Actually, there were a couple of 2-minute pullbacks that ended up being longs immediately. Unbelievable. I'm really happy that I avoided Tesla. The first time it looked fishy, the second time it looked way better, but now it's down to almost the VWAP level, which is 189, give or take 10 cents. It's going to be very tough to make up for losing trades in this environment. We don't have a, you know, other than Disney and I don't want to say ARM because ARM is so spready and crazy. I nearly posted it at 123. It touched it, moved the button above it, I think a couple of cents. No, exactly 123, unbelievable. If you look guys at 123 long ARM, the risk is $1.50. The target, I would say 2 to 250. So you need to take a lot of risk on this ARM trade. And the entry is obviously a very late one. I prefer 125 because of the round number versus 123. That's all. If anybody is, you know, up to this high risk trade, 123 long, I'm not going to post it in the room. 123 risking $1.30 to maybe $1.50. Keep in mind the spreads are 10, 15 cents, so there's also some slippage involved here. I would definitely accept any other idea versus this high risk trade in ARM. And now we're moving back lower. Obviously, Apple reacted. We still did not breach the ranges of this impossible session. $1. I would have to call it nearly impossible to trade this market. If not for Disney and Tesla in the morning session, obviously ARM. Okay, back to the lows. It doesn't mean that I see a new entry in Apple. I mean, I was looking at 118.20 when the risk was minimal. Now the risk is the risk can still be the VWAP. You just need to trust the SPY to continue lower to bring down Apple. You know, when the range is so narrow, the VWAP is meaningless because look, the VWAP has been run over all day. So on narrow range trading days, the VWAP has no meaning. It's meaningless because again, we don't have any trend. There are no like intraday support resistance risk, support and resistance because there is no support and resistance intraday. They are all at the highs and the lows, mainly. Guys, keep an eye on Alibaba. I know that it is barely moving, but the trade is still alive with very little risk. But now it has, the problem it has no momentum at all. So under 71.10, the entry. Now it's clear that the VWAP is above. We have amazing on paper, amazing target to the lows, but that's only on paper. Right now, it's things can change, or hopefully will change. Tesla touched the VWAP, moved up. That's fine. Now let's look for an entry point on another turnaround and use this VWAP support level as stop loss. Maybe at 189.50, maybe even cheaper. So we have either 189.14 or 189 round number, the stop loss on any long in Tesla. Guys, 8 minutes to the bond auction. I think that the 30-year bond auction, again, I don't care which bond auction is. It's just I'm looking at the SPY to see if there's anything, out of the ordinary happening at 1 p.m. We just don't want to be surprised. The land sessions, I have to tell you guys, this week have been brutal, but who's to blame for not trading Disney other than us, I guess. Guys, let's prepare a trade at, what about Baba? Nothing there. 189.30 long Tesla. And try and use 189 as stop loss. So let's see what's cooking there, guys. Coming closer to the 189.30 on this mini pullback. Okay, buying Tesla now at 189.30, and we'll use 189 as stop loss. Guys, you saw the spike? It's probably because of the market, obviously, but it's worth a very little risk here. The VOP is under, the round number is under. Okay, my only position is Tesla. Wow, this market is not great. Now that I'm looking, Nvidia took a big dive there. So very little risk, but the timing seems like not that great on this 189.30 long Tesla. Still in the trade, down like 10 cents. The market touched the 497.50. It's not really moving lower, but obviously have a small downtrend. That's another interesting play if you want to look for an opposite trade versus Tesla is a small cap LSPD. LSPD down 20% all over the place, up and down. Has amazing volume. Well, not amazing, but good volume for a small cap. Should be watched. It can move a lot up and down. That Baba trade refuses to trigger. What can I tell you? And the entry is a 71.10. You know, when you talk about China, you mean mainly Alibaba. Guys, as long as it is under the VWAP, Alibaba is that trade. Back to the entry pretty much in Tesla. Let me bring in Tesla back. Okay, now moving. Now the moving Tesla basically moved them 2 cents or 3 cents under the lows, under the stop loss. 4 cents. Now again, I will cancel Alibaba. I can't believe it. You know what? I'm not canceling Alibaba. Let's wait. I mean, it's only up 20 cents from the entry back to the VWAP. It can reverse. The timing in Tesla could not have been better. Look at this spike at 1 p.m., guys. Remember the 1 p.m.? So that's the target in Tesla pretty much reached at 189. Let's call it 189.90, even 80. That's 50 cents risking 30. Again, not a big move for Tesla, but take into account the horrible environment that we're trading. CFLT also reversed nicely. Apple spiked up. So that was so far a one-trick pony, but just in time for the partial in Tesla. Actually saved Tesla, let's face it. Now let's see if Alibaba can deliver anything. There is obviously an optional entry short here at 71.25, risking 15 cents. Again, I don't want to force anything. You know what? Canceling Alibaba, not canceling Alibaba. That's my problem right now. Double top coming up in the market at 498.25 or 35. SPY short, you have the 498.50, the highs of the day plus, or 499 again. 498.50 is a tad away. Anybody still long Tesla? Stop us 189, 189.30. It's like the market has no personality today. Nothing can save it from not being a good mover. Not even on paper aggressive news. The only stock that's now performing very nicely is, well, not only, but CFLT. That could have been a nice lunch winner for us had we entered it at the right time, and the right time was 31.6 on the way up and 31.9 after the pullback. 31.9 now, big winner for a lunch session trade. Alibaba seems lifeless, but I'm still thinking that 71.10, which is now in play, 10 cents away, can deliver a nice move. I don't want to say a strong move lower, but bring us maybe under 71 on our way to 70, 60, 70 lows of the day are way below. Okay, guys, 4 or 5 cents to the entry in Alibaba. I will take a 15-cent risk on the trade. The market is not supporting or not supporting any trade. Not a good move, but you know, no, I'm not expecting a fast move, but the important resistance support level is in this case where we're down, so resistance 71. Awesome. AMD, let's take a look. AMD also all over the place. Again, this this market is making me, I don't want to say dizzy, but don't have any trend at all, zero. Now almost 5 hours into the trading day. 4 hours, sorry. 9:30, 1:30, that's 4 hours, nothing. The VWAP has been really demolished today. Baba, a whopping 1 cent winner. It's trading Alibaba is like trading a micro cap, like a 75-cent stock. Tesla did its job, did the move 171, 190, touch 190 a couple of times and dropped now. So again, it's like, I don't want to say everything is so random in this environment. Alibaba killing it. Now a 3-cent winner. Okay, guys, the stop loss in Alibaba, not even 15 cents. You know what? I want to say 10 cents, but not going to be that cheap. Although every cent here in this session counts. Because, it's so tough to make, to recover from losing trade. Watching for a leg down or another leg down in Disney, so maybe we can try the trick that we used in Tesla. Expect, guys, a lot of buyers at 71 in Alibaba. Maybe if we break 71, maybe there's a chance in this trade, Lows of the day are 70.65. We're looking for 70.80. That will be reasonable, like a 30-cent move. The risk was 15. Not going to be easy to deliver 20 to 30 cents in Alibaba, but we are a third of the way there, up like 10 cents. 10 cents on a $70 stock, that's not a good crop. We're really happy to be out of Tesla. Now it really broke that VWAP and the 189 and basically Tesla is a tricky stock. Sometimes the move happens in the morning, sometimes even late in the day. Obviously the morning move was amazing. The late move a bit slow, or not that productive, let's call it. Guys, the stop loss in Alibaba at 71.11. So 1 cent risk on the trade right now, and that's not worth more. I think this is one of the few trading days ever where the market is not picking up any trend, and we are close to to the end of the lunch session. other than maybe holidays like Thanksgiving or I don't know whatever, Christmas or any other holiday that we trade on very little volume, and I don't remember that many, even 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 that that was even that choppy. At that point, the first hour that brings in some volumes. Very not a fun session. We're fighting like for every trade, guessing more than anything, guessing where this market is going. Okay, improvement, sudden improvement in Alibaba, down another 5-6 cents towards the 70.90, like aiming towards the 70.90. I'm getting tired of watching this choppiness in Apple, but maybe in our next trade, if the market moves lower, 188 tested in Apple, the VWAP is 188.30. Again, this is a potential trade if the market breaks down. Right now we have zero signal for that, but we have Alibaba continuing and moving so slow, but obviously in the right direction. We have zero risk right now in Alibaba, and 10 cents, actually 15 cents to the target, halfway there. Halfway there in Alibaba. Guys, you see anything interesting? If you see anything interesting. My only open position, Alibaba. The trend is sideways all day. I'm searching for maybe a trade that's like Disney, Coinbase, TSM. We still have the Disney trade over TSM ran away from us, but wow, TSM. Okay, guys, we need to make a change and bring TSM to our watch list almost on a daily basis. Maybe instead of, I don't know, Apple. Anyway, cannot give up on Apple, but TSM, brilliant. That's Taiwan Semiconductor, of course. Two-day breakout on the daily chart from 120 now up nearly $14 in 2 days. And I traded it this week at least, I don't know, 2 or 3 times, not today. What the fuck? Guys, you want to see an amazing mover? Take a look at WRK. Staggering move. Not a lot of volume, but very consistent price action. Wow. And an amazing, couple of amazing breakouts. Which one, Yoni? KYTX? Wow. At least I see, I don't see a chart, but at least I see the bid and the ask. So on our platform, it's not open yet, but not fully open. Okay, guys, good news. Alibaba is working. First partial coming up in 3 cents, under 70.80. Again, not a fast move, but efficient move. It wasn't in the, I think in the red, this trade, not even 2 cents. The target was 2 to 1 in Alibaba short 711. Second target, obviously, the lows of the day. Any move higher is made by sellers at the highs. Any move lower is made by buyers at 497.50. I mean, now the range is really embarrassing. That means that the market has no other option other than to deliver or maybe gain back some personality after 2 p.m. Sorry. Wow, the continuity not there for us. Another big mover today, but relatively low volume stock, Ralph Lauren, 171 at this point. Highs of the day, 172.50. Tough trade. Or very tough trade. Guys, if you see any additional trades, obviously we had, in retrospect, the best, and now that I'm looking at it, the best play, TSM, not Disney, not Tesla, TSM. Killing it today, alongside ARM. But it didn't test even the 123 at this point. It's down like to under 120. Like 15 to 20 minutes to the end of this very boring lunch session. Wasn't that boring because we had a couple of good movers. Obviously the best mover TSM, but at times Disney was a good mover, Tesla was a good mover at one point. And CFLT, an amazing mover, I just didn't figure out the right entry and ended up losing on my only trade there. And then it moved higher, and obviously I'm not in any trade right now other than Alibaba. We'll exit the trade basically above 71 on the second partial, and look for 70. Look for the lows of the day, either 71 or 70.60. That's my next target. TENX. What the hell is that, Yoni? That's probably a SPAC, the way it's trading. So there was, some euphoria a couple of days ago. I see it at 20 a couple of days ago, not at 80. 3 days ago it was above 20, dropped to 10, today to 5. Ouch. Guys, for the late session, maybe Apple under the 118, sorry, 188. That's why it's dropping. It's offering shares, and I guess nobody's in the business of buying them. Why would they buy this garbage? I mean, well, you know what? Maybe I'm wrong. Maybe it's not garbage. Maybe it's an amazing company. I'm just looking at the chart. The chart it doesn't, show anything other than terrible stuff. We had so many trading opportunities that I missed this run session. It's unbelievable. Most of them longs actually, not shorts. Even iRobot is moving higher today. Weird. You can call this price action today anything other than embarrassing. AMD, what a waste of time today. Up, down, changing trends like 25 times today. I guess Alibaba is done with the downtrend, delivered the target, but that was pretty much it at this point. Let's hope that the late session will be better, not in terms of opportunities, but in terms of the range, because if we have range, one trade, one good trade can fix everything. Doesn't necessarily mean that we move higher, we just need to move. Most likely higher, but we can move lower. Then we have Apple for a short play, PayPal maybe for more downside. Plenty of stocks that started red basically turned higher. TLTR, one of the best movers this week, obviously, with hold on a second, TLTR earnings, or amazing earnings. And wow, it's 3 days in a row up. The intraday price action is horrible, but other than that, amazing. Guys, is this the move of 2 p.m.? Already we are moving up on semiconductors? Is it possible? This 191 is back in play, guys, in Tesla. Which was our target for our VWAP trade. Guys, let's also watch. I know that it is a terrible spready stock, but an amazing mover. ARM over 120. I said before 123, but looks that maybe 120 is now the next level of resistance to the upside. As always, a tough stop loss with this ARM today, up a staggering number. It tested 120 already a couple of times, pulled back $3, which can happen in, I don't know, 2 minutes, 3 minutes. KYTX still not open on our platform. Maybe it's open, but data is not coming in. All I see is the bid and the ask, and that's it. Don't see anything else. As soon as I complimented AMD, it turned back under the VWAP immediately. Let's put it this way, guys. The way we're trading today, we need this market to, grow up and deliver something for us. We basically try to move over the highs, try to move under the lows. The result has always been nothing. Guys, in a couple of minutes, Scott is going to be back from his lunch session. KYTX Yoni, I'm just, I can see the bid and the ask. I just cannot trade it. I don't see anything other than the bid and the ask. Let's see if it's tradable. 35. Yeah, we can. I can trade it, but I just don't see, the chart, and I don't have, the spreads, the volume, nothing else other than I can trade the bid and the ask. Guys, in a couple of minutes, like I said, Scott is coming back from his lunch session. Let's hope that Alibaba will reach our target. Stop loss at 71, target 70.60, which are the lows of the day. You definitely need a lot of patience for Alibaba, but it's doing it, you know, not the ARM way. Let's put it this way. Let me see. I saw a trade that I was interested in. Yeah, AFRM, guys. AFRM should be and maybe will be a good mover into the close. Highs of the day. You know what? It's too extended. Upper 8%, but very extended, uptrending. Just don't see a good entry there at this point. Watch the market, guys. Finally it's turning lower.
Okay, traders, good afternoon. Welcome back to the afternoon session. How is everybody? Hopefully doing well. Michael, thank you so much. All right. Well, interesting here. Market right now, as we're talking, the SPY looks exactly like what we had going on yesterday and the day before that. Just a very much of a mixed bag, up and down. Not optimal. Okay, let me try to get the mic rocking and rolling here. Hold on. See if we can. A little bit better now, Dan. Sound test. Let me know.
Very high, Scott. Very high volume. Just, I think that's the problem.
Okay. I'll adjust. Okay. Any better now? We all set? Yeah. Okay, DBG. Thank you. All right. Good. Thank you, Michael. Thank you, Dan. All right. Better. All right. Yep. Perfect. All right. Here we are, coming back from lunch into the afternoon session. Here is the thing that I don't know, worries me. Not worries me, but you know, when I look at it here, I'm thinking to myself, we don't have that much to go to be green, but yet this up and down motion here, we don't have much to work with yet. So it's going to be a little bit of a wait and see as we get going this afternoon. Okay, traders, let me fix something. Okay, I think I've fine-tuned everything. I think we're back in business here now. So as we were talking before, the market itself down going into this this afternoon session. And as we look at the market, let me get the numbers here. Market really just flat now. Dow's up a point, S&P down a point, NASDAQ up 27.6. So we're really flat across the board with the indices right now. Looking for direction. Do we get it into the close? Not sure. I had Meir's Day last week. Feels so good. Yep, awesome. Now, right now, we just got to be careful, I think, with the market direction going into the last, hour and a half of the market right now. We'll post a Tesla trade at 190 here. This will be a small share size trade. TSLA long 190. Stop will be 188.50. Target will be 191 and into the close. Mark's got a question. At 1:02 p.m., there was a huge spike on the SPY with heavy volume. Does that influence your bias to upside or downside? So if I go to the SPY and I look at 1:02, not sure if you're looking at the 1 minute or the 5 minute chart, but we can look at both. Let's see. It would be what, 13:02? Oh yeah, this big spike right here. I mean, it gives me hope that the market will finish green, but to me, it's all about yesterday's close, Mark. So if you're looking closely at the market, all that I have to do is look at that dotted white line there, and that's the target. Anything over that bias to the long side into the close, anything below it or flat is just a bias to the downside or flat close today. Yeah, well, I mean, listen, if you're gonna cheer it on, then it's obviously where you're at, either short or long the market. That's fine. All you got to do is really DVG look at the look to see where we're going to head with the overall market, and I think you're gonna find the trade, right? I mean, we continue to trend down with the overall market. That Tesla is going to pull back down, but it is up for the day. So I mean, I've got the stock is up, the market is marginally higher. So if the stock's going to lead the market, then I want to be long Tesla here. Take a look at ARM. I'm going to try an ARM trade 118. This is going to be a small trade too. And I'll tell you what, on the ARM trade here going forward, I want to just build a position here with the hopes that the market is going to move higher into the close today. Okay, traders. Mark was just asking here on the on ARM and Tesla. ARM target, if we can get into this stock, will be 120 to start, right? And then if the market starts to run, we should be really good to run higher here and take advantage of that 124, 123.50 to end the day. And then on Tesla, target will be 191, and then we'll reevaluate at 191 just to see again if the market is coming along. Again, on the top of my screen, I'm watching the overall market like this, and for me, we've got to bounce up and take out yesterday's close for us to have any chance with these longs going forward. So, Mark, just stand by. We'll get into these together, and hopefully have a nice run at it. And now NVDA at the bottom. Struggling here. That would be a 701 long. Yeah, we'll see. We'll see if this market gives it up or not this afternoon. Fairly flat right now. ARM just bouncing now off the VWAP line, the blue line that's on the right side of my screen. NVDA, there we go, down to the downside now, slipping underneath the low underneath the VWAP line. And Tesla's starting to percolate here to the upside. 190 entry, 190 entry on Tesla. Okay, I'm going to adjust here, 117 now on ARM. A little bit early here. I'll add at 118 and target will still be the 120. Stop loss will be under the VWAP. Market's still mixed right now. Dow's down 16 points. Nasdaq's up 25. S&P down 2 points. NVDA now pressing the low of the day. Yeah, ARM's standing up pretty good. As long as it's above that VWAP, we got a chance to run into the close here. We'll see what the last power hour does. We've got almost an hour and a half to the close today. Yeah, here comes ARM now under the VWAP. Probably have a change in the market right now, and we'll take a look at the SPY to give us that indication. Good job, DVG. And there goes Tesla falling down to the low with the market. Is this too early, or do we have a big sell-off ahead of us? Yeah, I like that. I like that mega. Yeah, that's awesome. Yeah, Tradenet t-shirts. Those of you that want to get one, Clifton's got some here. We'd like to get these gone as quick as possible for 20 bucks. It's a heck of a deal. Just click on the links there. Clifton will send them over to you. That's huge, DVG. Could take the ARM over 115 now, which is the VWAP line. It's either that or this stock is going to run down lower for this close today. Okay, I'm going to revise ARM one more time. This will be the last time, and if we don't get this trade on, then to me, it's going to be a down day for the stock. 115 entry here, and we're going to nibble on it. Small share size to start on ARM. Okay, watch the entry here, 115 ARM. Coming up on it, 10 cents to go here. 3 cents, there's the entry, 115, I am long ARM. I guess that low would be the stop right here. Call it 113. Okay, traders, looks like we have a home run now here on the ARM trade. I'm going to take a point out of here right now and take off 3/4 of the trade right here, 116 and a quarter. I'll go 116.14 and I'm out of the trade, ARM. So we're 6 for 6 today, not a losing trade in sight on this beautiful Thursday. And we're going to hold on to the ARM trade. We could actually add to this trade as it gets over 118 as a successful strategy into the close today. So just be on your toes looking at the ARM trade, and we'll watch this. Hopefully we get that. Once we got the move over the VWAP line, the trade becomes easier to understand, easier to get into, and easier to hold. Target 118 now. We'll see where we go here into the close today. Yeah, no doubt. Anything under 114 on the arm trade, I will come out of this trade. The rest of it. Let's take a look at it. MMTH. Is it MMTH? Hopefully this small pullback here on ARM will lead us to a bigger gain now. And watching Tesla, 2 stocks into the close. Yeah, we're almost there right now. In fact, 2 minutes now till the final hour of the day. And I'm holding on to ARM on the long side here. And I'm also looking to add to that with the Tesla trade. So we'll see exactly if we're going to get into that or not here into the close today. If this market will make up its mind or if it's just going to go sideways.
Scott, this is choppiest S&P day ever. We haven't seen anything like that.
Yeah, this whole week has been that, Michael, where we've got the chop in the market. You can't really tell the direction. Today's been an awesome trading day, but it's just been very tough to have that ongoing move, you know, where we can kind of get behind it and add to the trades.
Exactly where we were at minute 1 right now. And the range is still
right
under $1, I think. Most of the trading day.
Straight flat on ARM. And here comes the Tesla trade. Watch the 190 entry here, 190. $0.15 to go on Tesla. Small share size. We can add up over 190.50. Would like one move up to that 120 on ARM. Let's see. I mean, it's a total guess now, the market, but I mean, Tesla's starting to lead us here out of here. Let's see if this is going to be a leader, or I have that sneaky suspicion that, like Michael said, that we're just going to probably go sideways into the close today. But Tesla's been up all day. and it's pulled back to this VWAP. It's got good support at that VWAP. Now let's take it over that 190.
There are actually no news coming up tomorrow. It's like, why is this market not moving? Maybe the market is again too extended at all-time highs, under 500, and there is some profit taking here. But we're not moving lower, so we're not moving higher, we're not moving lower, we're just not doing anything. Plenty of good movers though. I mean, ARM is and Disney were amazing trades today. Even if nothing happens tomorrow, those stocks should be on everybody's watch list. Disney and ARM, and of course TSM. I'm still waiting, guys, for almost 3 hours for that Apple break under 118, 188. I don't think it's going to happen the way we're trading today.
So close on Tesla. Let's see if we get over the top. Down that much now on ARM, just starting to go sideways here in that last hour.
Guys, we are back at the highs of the day. Again, real resistance now 498.50. That's all-time highs. I don't have any new trades right now. Took 20 cents in Baba and bailed out of this trade. Out of the 30-cent move. Not bad, but obviously way below what we expected. Again, this market is probably not going anywhere. We have 45 minutes left.
Yeah, let's see. I mean, I want to think that we're going to go higher here. I just don't know. That's what this market has been giving us all week here, right? And it's given us that I'm not sure we're going to bounce up and down, and we don't have the clean, clear direction to make things easy. Today's been the best day of the week for me, both profitability-wise and able to read this market. We are at the high right now. We'll see if that continues here as we close out the day. Got about 44 minutes or so into the close, 45 minutes. Did you take ARM at 117? Yeah, I plan to add at 118, Kieran, yes. Okay, SPY at the top of the day. Now here we go. Let's press up this Tesla trade entry 190. Come on, let's press that 190 now. SPY at the top of the day now. Now we've turned things around. Dow's now up 38 points, S&P up 3, NASDAQ up 41. Maybe continue the green day that we have and that we started with and run it into the close, and then hopefully tomorrow we finish out the week strong and green for the investors in this market. We're breaking out now, all-time high now on the SPY, which is great. We are long and strong Tesla, target 191 or close to it now. Still have some ARM trade, so some ARM shares right now into the close. Yeah, S&P were close, right? But what, 1.25 points away from 5,000 on the S&P? Now less than 1 point on the S&P? I don't know if we'll get it today. I bet we do, so we can get that headline in there for the 5,000 S&P. Little pullback at the top now here. I'm out of all trade, all shares ARM. The only thing I have right now into the close is Tesla, TSLA. Small pullback here now. I think everything's DVG. I think everything's being held back right now, and they're just looking for a reason to break out. And I think this market will give them the reason to do it. Okay, here comes the SPY. I think one good push now into the last half hour. Right on, DVG. That's the trigger, right? Do we break out here or not? Waiting for the SPY to catch up and run? Market's now up 32, S&P up about 4, and the NASDAQ up 47. So not a banner day, but not a bad day. $25 minutes to go, just the Tesla trade here into the close. I guess we're pulling back now. Again, 20 minutes to go. Got plenty of time to turn this around if this market is for real. Otherwise, it's just going to be a flat day today. Underneath that VWAP on Tesla will come out. Still in the Tesla trade, still holding up fine. Yeah, I mean, you could definitely flip short under 189, but here's the caution, Steve. The stock's up for the day, so you're just going to really go in for the scalp if you're doing that. Just at that VWAP break, that's where my stop loss is. Still holding on to Tesla here. 15 minutes to go, traders. Yeah, down about 50 cents now on the Tesla trade into the close. Coming back up. Let's see if we run here. I'll be here a couple more minutes, and I'm going to call it a day. About 5 more minutes. We'll be done and off to tomorrow on a Friday session. Don't join us early tomorrow, 8:30. We'll get started at 9:20 here with myself, and Meir will be back tomorrow. We'll close out the week strong. I've had 4 green days in a row. Today, the best day of the week.
Guys, have a good night. See you tomorrow. Overall, a wasteful day if you watch the SPY. Totally different if you look at individual stocks. So individual stocks, some of them did an amazing job. Should be watched tomorrow. All the big movers: TSM, ARM, CFLT, OSCR, even Ralph Lauren, although it's a very spready. Disney, of course. PayPal, just to name a few. So good night, everyone, and we'll see you guys tomorrow.
Michael, have a great night tonight. We'll see you tomorrow. Okay, traders, that's going to do it for me as well. I'm out for the day, out of the Tesla trade with a small loss here, about 60 cents to the losing trade. That's not going to matter one bit. Share size was small. I will see everybody tomorrow. I want to thank Michael, Clifton, Aggie, the rest of the team for participating today, along with Meir this morning. We'll see everybody tomorrow. Everybody have a great night tonight. Be safe. Love the one you're with. God bless you all.